Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Hey, welcome everyone. Good morning. Thanks everyone for joining. Welcome guys. It's 6 a.m. Eastern, early in the morning, and it is Wednesday, September 17. So thanks everyone for joining. I hope everyone is well rested. It's going to be a busy day today in the markets. It's our midweek Wednesday. It is hump day for some of you guys. The week is almost over. We're halfway up the hill and we're going to now come down. So please guys, today is FOMC. It's a much anticipated FOMC. It might be the first rate cut in almost 1 year for the US. So it's going to be a big one. It's pretty much baked in that it's over 95%. It's going to be a 0.25 basis point cut. It could also, analysts are saying anywhere from 3 to 5%. It could possibly be 50 basis points, 0.5. I'm going to go with, if I'm a betting man, I'm going to go with the 90+%, and I'm going to bet it's going to be a cut of 0.25%, which probably is not a surprise to all of us. So we'll see how the market reacts. It could be a different type of FOMC with this news. Historically, when they do decrease rates, the markets do move in a bullish manner, but today it could be a buy the rumor, sell the news event. But we'll slowly work our way into it. So today's session, what we're going to do is a live New York from 6 a.m. starting now. We're going to go until about 10 a.m. and then we're going to wrap it up so we can get some breakfast, we can get some rest. Dave will come in post, do a couple hours, just some review, maybe look for a trade setup, and then we will resume again around noon, 12:30 p.m. and we'll go till 3 p.m. and then we'll do again some charting. Remind you guys, it is going to be volatile, and we'll see how things work. And then we'll get another break. And if you guys still have a little bit of energy, we do have we're bringing back our Wednesday webinars for you guys for the snipers in Zoom. It'll be 7 p.m. Eastern, and we'll go till about 9 p.m. Eastern for about 2 hours. And we're going to talk about and then right over here on the bottom of my trading view chart, this toolbox and some tools that I have in here. I'll discuss them, and we'll talk about other tools, handy tools, and also just maybe a couple indicators we'll talk about just to get you guys aware of how to use this toolbox and which tools are better than others, okay? And so it's going to be busy, and then after that we'll get some rest, and then we'll be back at it again tomorrow morning at 6 a.m. Eastern, okay? Excuse me. So I just hope you guys got some coffee and ready to go. Thank you guys. We almost have 200 viewers on YouTube. If you guys can kindly leave us a like, we do appreciate it. It helps grow the channel, helps find more and more traders that are willing and learning and wanting to learn how to trade. We do appreciate that. And also subscribe to the channel and hit that notification button if you haven't. It will benefit you because in a few weeks, I'm going to be doing all sessions. Okay, so I'm going to be coming on here. It might be unannounced. It might be right now during this time. It might be a post New York, like around 11 a.m. till about 2 p.m. Show you guys how New York moves post New York. It could be in the Tokyo Futures session. We might be doing some of those 8 p.m. to 10 p.m. sessions with some webinars and to show you guys how futures market opens up and how volume moves in the Tokyo Asian sessions. And then we can also do some live London. That's early for me in the morning. That's like my 2 a.m. Eastern. But I'm willing to do these different sessions. If we have enough support on YouTube, we will do them, okay? So hit that notification button because some of them might be unannounced. And you never know, maybe we'll get some weekend sessions and do some crypto. We used to do that when we first started 5-6 years ago here. We were doing Saturday nights, we were doing Bitcoin analysis and scalping. So we might bring that back. So as long as there's enough support. Okay, guys, so now we got some, household news out of the way. Let's get into this. So good morning, everyone. We will be getting into the charts. We will look at gold. We will look at NASDAQ. We will look at US30 today. 100% we will. But first thing is we got to do our homework. We got to talk about the news today. We got to go through our daily routine, look at what high impact news we have, at what time, remind all of you guys. We'll go through earnings, see if there's any big names pre-market or after hours that could affect anything. And then we have a little bit of a blog, a little bit of education about what is FOMC, just to go over it, because a lot of you guys might be new traders and have no idea what we're talking about when it is FOMC. I just want to tell you it's one of the most volatile news events that there is. NFP is one of them as well, non-farm payroll. That's the first Friday of every single month. That's a very volatile session as well. Very volatile news events, and FOMC is another one, okay? So this is traditionally a day when they release that news. A lot of retail traders are gambling, high leveraged, and they do blow up their accounts and lose a lot of money. So let's try and not do that today. Again, please, this is part of trading. It's part of your job as a trader. Now it's Wednesday. You gotta look back at the start of Monday, yesterday. How are you doing trading wise? Are you doing really well this week? Did you get a good start? Are you on your way to your weekly goal? Do you want to risk it all now for like FOMC later this afternoon and give it all back, or do you want to tread carefully, right? So these are all things to consider. Maybe if you already had a rough start Monday, Tuesday, do you want to compound that problem by continuing to add leverage and add further losses, okay? So everyone is in a different situation. I hope here, if you were with us on YouTube on all last week and this week, we're doing pretty good. So you should be learning and learning how to grow your account and compound it as well, okay? But you got to learn your own personal risk management, okay? It's very, very personal. It's hard to teach risk management. You got to kind of learn with experience in the markets, okay? Our job here is to constantly remind you guys. But again, some of you guys listen, some don't, so I know how it is. I've been coaching for a few years now, and I understand how it is, okay? But let's get started. So first thing is Forex Factory. Let's see what news we have today. So you guys know today is Powell with the Fed rates. So this will be at later this afternoon. We'll come back for this session. So please, guys, again, subscribe to the channel, hit the likes. If we have enough support, then I'll come back this afternoon and we'll do this. Okay. So we had some British news coming out in the pre-market. We had CPI year over year come out, 3.8% in the UK. Which was on par with forecast and the previous, so no change there. Core CPI is going decreased, and RPI year over year also decreased. ECB President Lagarde already spoke at 3:30 a.m. Eastern. That's 30 minutes after London market open. We continued with some Eurozone news. We have a tentative German 30-year bond auction that already happened. And now over here, this is 8:30. Okay, this is normally when we get our North American news over here. So in Canada, there's some foreign security purchases here. We have some US building permits and housing starts. So that will be at 8:30. Just a reminder, this is when we'll be trading gold at this time. So 8:20 is COMEX market open. That's the commodities exchange open. So we always look at how COMEX is opening. Like yesterday, we had some red US news, the retail sales. Today, we just have some low impact news. Then we move into Wall Street at 9:30. This is when we kind of transition, and then we're looking at the US indices, NASDAQ and US30 at this time. We do have lots of Canadian news. I'm here in Canada. Where's everyone else from? I'm from Ontario, Canada, very, very close to Toronto, Ontario. Maybe some of you guys are familiar with Toronto. Where is everyone from right now? Everyone in Zoom and YouTube, where are you guys all from? Share it in the chat. Let's see where everyone is from. South Africa. A lot of South African traders. Don, welcome. Kenya, Malta, Abu Dhabi, Pakistan, UK, Lebanon, Indiana, not India. Indiana, that's Botswana, welcome. Morocco, Turkey, Ghana. Where else we got? In Zoom, you're from the UK but located in Saudi. Nice. Okay, guys, so it's nice to see everyone from all around. Mario, Pristina, Kuyeshive. Welcome, guys. Okay, and now we move from, we have our Canadian news, which is basically FOMC over here in Canada, but it's not as important as the American one. We have the Bank of Canada rate statement. We have the overnight rate. So we already are looking at the previous was 2.75 here in Canada. They're forecasting a quarter basis point decrease as well at 2.5. We'll see today's actual number that they release. And then we have 45 minutes later at 10:30, we have the Bank of Canada press conference. So this is very similar to Powell coming to the podium at 2:30 and answering questions and giving analysis and forward guidance as to why the decision was made. So those are high impact red folders for the Canadian dollar. Again, if you're trading Canadian dollar at this time, please be careful because this is high impact news. We also have our weekly crude oil inventories. We have these every Wednesday at 10:30 a.m. Eastern. If you're an oil trader, keep an eye on that, crude oil inventories. And then finally, we have our big day. Okay, this is what the entire markets are waiting for, is for this news. 2 p.m. Eastern. Notice the timing. It's mid-afternoon in New York, near the end of the day. We have our federal funds rate, which is previous was 4.5%. They're forecasting a 0.25% decrease at 4.25%, and we'll see the actual result that comes out here. So if it comes out 4.25%, we know that they decreased a 0.25%. If it comes out 4%, then it's a substantial decrease of 50 basis point, half. So this is going to be very significant. What if they throw us a curveball? You never know. I've seen it before in the past where when we're waiting for like a quarter or a half point decrease and something changes, who knows what it is, and this comes back out at like 4.75 and then it's a 25 basis point hike. It's like a curveball, unexpected, and that kind of shocks the market. So I don't think that that's going to happen today. That would be not very good for the US if they were to increase at this time when analysts are expecting a decrease, okay? So that would be very, I don't know what's going on in the Zoom. Why can't I see you guys, your messages? Due to the large number of participants in this meeting, system messages are for those who joined or have left. Can you guys message me in the Zoom? I'm not getting any messages or in the chat from you guys. Oh, there you guys go. Okay, I didn't, because I wasn't getting anything. I thought there was something wrong with the Zoom. Okay, guys, so we'll come back later for this FOMC, and we'll talk a little bit about this. So notice that there's a federal funds rate. They'll release the number. There's FOMC economic projections. Okay, not every FOMC event includes these economic projections. So this one does. That's why it's a highly anticipated FOMC. There's the FOMC statement. And then finally, after they release that, that's the first 30 minutes. Then it gets, again, volatile as well at 2:30. This is 30 minutes after, and this is when Mr. Powell, right here, this gentleman in the suit, he comes to the podium and starts giving his press conference. He starts answering questions, giving guidance as to why the decision was made for either a decrease, a pause, or a hike, and why they're determining that. So he'll give a little bit about monetary policy, talk a little bit about jobs in the United States, job creation, unemployment, inflation, tariffs, maybe he'll talk about. But all of these will be part of his speech, and then he'll take questions from the audience. Normally he gives the same answers, kind of he dodges the questions. You know, he gives those political answers. He doesn't really get deep down into it. I don't know why he doesn't do that, but I can understand. He's got a tough job. Like, he's under a lot of stress over here, but we'll see what he says. Hopefully we can listen to this live like we did last time on our live session later this afternoon. Okay, and then we go into power hour. Then the end of the day, then you got some after hours earnings, and then you go into the New Zealand, Australia, and then volume moves into Tokyo in the futures market. Okay, so that's what we have. Like right over here, Wednesday we'll see the Fed deliver an interest rate cut, most likely 25 basis points. It's fully priced in, they're saying. So material market impact would have to come from either a surprise of 50 basis point cut or commentary from Chair Powell that swings dramatically in either decidedly hawkish or dovish direction. Okay. So that's what we have. That's the news today. Earnings, let's just go through real quick. Pre-market earnings, we have General Mills. This is the cereal company. Over here, they're reporting at 7 a.m. We have Manchester United, to all of our European footballers out there. Manchester United is a publicly traded company. You can trade this. I don't think they're doing really well right now. So maybe their stock price is going down. If they were number one in the EPL, in the English Premier League, then maybe their stock value would be increasing. So you can trade this company if you guys like. You can also watch football and enjoy football, okay? We also have a pharmaceutical company and these others that I wouldn't pay particular attention. In the after hours, we have Cracker Barrel Old Country. They were in the news a couple weeks ago about possibly changing this logo. It's an old man by a wagon over here. They were going to go with just a different logo without that. And they lost some share value. Like their share price started to drop. I'm telling you, it's not a good idea to do that. We've seen just the pattern of companies that go woke and they go broke. Investors do not like that, okay? So then they said, okay, the CEO came back and went back to the original logo because I guess she figured it out real quick. It's not good to do that. There is a company called Bullish over here. So if we're bullish today, maybe look at one of these companies, okay? But that's our earnings today. I don't think any of these companies are really going to impact S&P 500, NASDAQ, or Dow Jones. Okay, I wouldn't pay too much particular attention to these. We've got the EPL standings over here. You see, Ron did a little research. Here's Liverpool is first place, 12 points. So match played. Every team here has played about four matches. Liverpool 4-0, 4 wins, 0 losses. Arsenal second. Tottenham, Bournemouth, Chelsea, Everton, Sunderland. I'm going down the list. Where's Manchester United? There's Manchester City, Crystal Palace, Newcastle, Fulham, Brentford, Brighton. Then we have Manchester United. What is it doing all the way down here? Isn't Manchester United normally at the top over here? What happened to Manchester? They're over here, 1 win, 2 losses, and 1 draw. Okay, Wayne? I'm just putting it out there, okay? I'm just doing my research, okay? Because it's a publicly traded company, so I got to do my due diligence. I got to see. They're near the bottom over here, okay? So I'm sorry to all the Manchester United fans, but oh man. So, okay, a little off topic. Let's go back to trading. And here, okay, so let's get focused over here. This is the big day. Here's Mr. Powell. Fed on the verge of the first 2025 rate cut. So the bigger question for investors is how many additional cuts the central bank might make this year amid persistent inflation. So again, it's his forward guidance. We got to listen to what this man is saying during his conference later today. Because yes, we have a rate cut that's already factored in. It might not be a surprise, but maybe what the investors are looking for is there how many more additional cuts for the rest of the year will be coming. So maybe Powell will hint that maybe we'll have more rate cuts to come in the near future. Maybe he could just say this is a rate cut for now, and then we're going to see how things are going month by month. And But then you can notice his tone of voice. If he says we're doing a rate cut today and more to come in the future, like 2 more, then that's a different tone of voice, the way how he's talking. So then investors forward guidance, and then they start again investing in different sectors in the economy. Okay, so that's going to be later today. We don't have to focus too much on that right now. That's later this afternoon. China bans tech companies from buying NVIDIA's AI chips. Okay, so that's news. That will affect NVIDIA over here. I can see NVIDIA is down 1.6% right now. US stock futures stall in the countdown to the Fed decision later today. Investors haven't been this bullish on stocks in months. So you can see the stock market is continuing to rally. Nothing has really, a lot of analysts, I'm reading the word crash. They're saying after today's FOMC, markets are going to crash. I don't know about the word crash. That's a big word to use. A pullback is a better word. A correction is a better word. But to use the word crash, there's got to be something significant, impactful in the world that could cause a U.S. market crash. Okay, I don't think we're going to get a market crash. Pullback, correction. That's the kind of language I would be using if I was, one of these big wigs out here with the suit and tie talking about things. A crash kind of installs fear in people, and maybe that's what they're looking for. Maybe they're looking to install fear so that everyone can start selling. And guess what? These big rich elite will buy up the bottom, no problem, pennies to the dollar. So we got to be smarter than that, and just. I trade candle by candle, day by day is the way how I do things. What else we got going on? StubHub raises $800 million in US IPO. So StubHub, if you guys don't know what this is, StubHub is a website that, like, I'm going to NFL football game this weekend. I'm going to Chicago to watch the Chicago Bears versus my Dallas Cowboys. You can go to this website, StubHub, and buy football tickets. You can buy concert tickets. You can buy anything off of this. It's kind of like a auction where they're selling tickets. Scalpers are selling tickets on here. Look, they have an IPO, so they're gonna be a publicly traded company, and this is their IPO. If any of you guys have used StubHub, you guys know what I'm talking about. Might be news to you. What else we got going on? UK Pharma, GSK, to invest $30 billion in US amid tariff threat. Trump and India's Modi talk to avoid clash over tariffs with Russia. Nvidia's in the news. Tech giants pledge $42 billion investment in UK as Trump visits. What else we got? I'm just going to go through these real quick. UK inflation. So we had UK release some numbers today. In UK, inflation remains nearly double target ahead of expected interest rate hold. That's what we got going on, okay? Markets are very flat right now. S&P futures, 0.00%, no move. Dow, 0.03, flat. NASDAQ, negative 0.01, flat. So markets are flat right now. No big moves. We'll see as we start to move into Wall Street and more so the FOMC today, okay? So that's what we got going on today. It's going to be a busy day. Our Discord, guys, we had a few signals sent out along on NASDAQ, along on DAX, swing trades over here. Let's see what we got going on. Sell oil, that was a while back with the swing trade on oil. Commodities over here. We had a buy yesterday at the 36.85, which hit approximately 100 pips. So we'll see if we get any signals today. Also, FX pairs. Yeah, this is the one. Sorry, I was looking at this one. Yesterday, we sent this one out for look for a sell on USD JPY, which hit above 130 pips. So you can see we're looking for sells below this area, 147.70. There was the initial push, volume closed below, and then you see how it came back up, retested, and then started to diverge away with lower lows and lower highs, came back up. They really pinned it down, continued to push it down, pulled back up into right in there, 50% of that candle, pushed down and continued to go down, okay? There is signals, trade ideas that we do send out to the group if you guys are interested in that as well, okay? In our Telegram, guys, There's a free Telegram pinned at the top of the channel for you guys on YouTube. There's 337 viewers, guys. If you want to join this free Telegram, it's available. It's pinned at the top. I suggest right now, I'm reminding you guys to join it right now. There is a lot of scam groups out there that are impersonating us and messaging you guys with this same exact thing. They've copied this page, and they're telling you guys, if you give us a couple $1,000, we will return you $100,000 in a week, paying crypto and things like that. Do not fall for that. It is a scam. That's why I want to tell you guys it is a scam. Dave and I personally will not message you guys asking you guys for money that we will invest it in the markets for you guys and give you ridiculous returns of 100% in a week. It's stupid. As soon as you get a message like that, please delete it or block them, okay? So this is our legitimate channel. This is us right now. I pinned it at the top of the YouTube. So that's the one I want you guys to join, this one. It's right over here. Here's Mr. Powell. You know, we'll see him. Ron wants those rate cuts, so we'll see if Mr. Powell can give them to me. Here's our link for our live YouTube videos. This is what you guys get, and it's free. So, you know, you'll always have an updated one of the previous one when it's coming in. And here was a sell signal over here with a 0.25 lot from 36.75 down to 36.67 and yielding 183 US dollars on that trade. Okay, this is a blog we're going to go over together as a team. It was posted yesterday for you guys, so you guys can do a little research, maybe learn what is FOMC, why am I spending so much time talking about this, what actually is this. So we'll talk about that. This was a breakdown of the post-New York session with Dave in the private Zoom yesterday. So if you join the team, you can be part of this. This is a breakdown of Dave's buy over here on gold and with everyone in the Zoom, okay? And guys, thank you everyone for your comments on YouTube. We do appreciate you guys. You know, we give you guys shout outs all the time. And that's a free blog available for everybody, okay? So let's now just continue moving forward, guys. Here's our website. If you want to join the team, we do have a lot of education. Today, we're going to ramp up our education. We have 4 sessions today. Myself right now, Dave Post. We're coming back for FOMC. Then we have a late night education session. We're going to do live webinar for about 2 hours talking about TradingView Toolbox, indicators, and tools, how to use them, how we do every day here. If you need individual courses, lots here. If you need long form boot camps, they are here. I know a lot of you guys are struggling with the psychology of trading. We have a full dedicated 5-day boot camp to break down the psychology of trading. Trading is not just all about fundamentals and technicals, not always about just news and candlesticks. You got to also understand how to control your emotions, your psychology, how to handle losing days, how to handle when you're in a slump for multiple weeks, how to also handle winning streaks when you're doing really well. How do you stay composed and not get carried away and lose it all again? Okay, so these are components that we need to learn, and it needs to be part of your entire trading system. And then we have over 100 long form webinars. We have a dedicated section for beginner, intermediate, and advanced. Okay, we want you to go through these in this order. That's why it's specifically listed like this. If you go into the advanced level and you're just today's your first day of trading, you will be confused in there. Okay, there's some topics that are advanced, so I'd recommend you start at the beginner level and work your way into there. Okay. Also, we're going to start to ramp up our super systems of trading. We'll talk all about that. Just like has anyone ever coached any sports before? You know, maybe some of you guys as parents, maybe you've coached your kids' soccer teams, maybe football teams, maybe basketball, maybe you're a swimming coach. I don't know. Have you guys ever coached anything? Doesn't even have to be kids. Maybe an adult league you've coached before. But all coaches, they want to win a championship, right? It's just like in the NBA, in EPL, we just talked about the English Premier League. I'm sure Manchester's coach, Manchester United, wants to win a championship, right? That's the point of, you know, sports, is to win a championship. But there's got to be a system involved to win a championship. So just like in trading, all of us want to make a lot of money, right? All of us want to hit our daily goals. But it's not, you have to have some sort of system to achieve those goals. A coach needs to have some sort of system in order to get that championship. What is that coach's system? Maybe the drills, that in basketball, maybe like the drills that they put you through, that's up to the coach. Maybe when the game, how to accommodate the players to work well together, like which players work well together, that's up to the coach to decide. You know, maybe he wants to put do you put a small team out or a tall team? Do you have more centers and forwards, or do you have more point guards and shooting guards on the floor? What type of defense are you going to put? Are you going to go man-to-man, or are you going to do a zone defense, like a 1-2-2 or a 2-3 zone? So all those basketball coaches out there, you probably understand what I'm talking about. You can either play man-to-man defense, or you can go zone 1-2-2 if you want more guys in the middle in the key to get a little bit bigger, or you go a 2-3 zone, you know, if they got shooters on the outside. So I'm a basketball coach too. I coach kids basketball, so I have a system the way how I do it. And that's why we can win championships at the end of the season, okay? So that's how you got to have a system in trading. Trading is not just about candlesticks and hoping to hit your daily goal. You got to have some sort of trading plan. You got to have some sort of system the way how you're reviewing your trades. You got to have some sort of system with your risk management. All of these things. You got to put all of these things together in order to have a championship team. I'm sure all of those teams that win the Super Bowl, they got great coaches. I'm sure all of those teams that win the NHL Stanley Cup, I'm sure that they got great coaches. They have great players, but I'm sure that they have great coaches as well that put all those players together to win those championships. Manchester, I don't watch English Premier League. I saw the standings. So they're probably, did they fire their coach? Are they looking to get a new coach? Is there a reason why Manchester is struggling? So first person that gets canned is the coach. It's probably his system that he has installed in those players. You know, you bring in a new coach, maybe he can turn that entire team around with a new system. Okay, so that's how you got to look about trading at trading, guys, too. It's just like sports, same thing. You have to have a good sound system in order to achieve good results, right? This is our live schedule, guys. So we got trade ideas throughout the week, Monday to Friday. These are all of our live sessions. We're doing Monday to Friday with you guys, 6 to 10. Today's Wednesday. You see how busy we are Wednesday. We got a post New York with Dave. Maybe Dave will cut it short just a little bit so then we can come in and start analyzing without rushing the markets here. So if you're going to join us for our live FOMC later this afternoon, here it is. So it'll be around noon or 12:30, and we'll go till 3 p.m. Eastern. We'll go through all the news. And then later tonight, we do have our 7 p.m. weekly webinar, back to school class. We'll talk about TradingView Toolbox and indicators. If you guys can't join us on Zoom, I will record it and it will be uploaded on the website, okay? Just continue forward. Let's go through, let's learn now. Here's our free blog, and here's FOMC. FOMC stands for Federal Open Market Committee. So let's break it down. Okay, so FOMC, the FOMC is a branch of the Federal Reserve System responsible for overseeing the nation's open market operations and setting monetary policy, including interest rates. It consists of 12 members. Okay, so the FOMC is not just Powell. He's the head chairperson, but it is consisted of 12 members. The 7 members of the Board of Governors and 5 of the 12 Reserve Bank presidents. Okay, so pretty big names here, big wigs over here, are in control of the US dollar, right? They are the Federal Reserve. They can print as much as they want, and they can turn the printer off at will, okay? So we will see what they're going to do today. The FOMC meets several times a year to discuss and set monetary policies aimed at achieving stable prices and maximizing employment. Okay? Pauline, I like how you start with the news for us lazy people. It's not so much lazy people. It's just a reminder, okay? I don't think you guys are lazy. It's just a reminder, okay? I want everyone to know what we're trading into, because this is where a lot of retail traders make these crucial mistakes, and they're trading with high leverage in these high impact events, and they don't understand the implications, and that's when they blow their accounts or lose everything, and then they blame the market, and then they blame everyone else but themselves. So this is a reminder, guys. I've traded, this is not my first FOMC, I've traded quite a few of these, okay, in my time, and believe me, You want to know what these are, what they represent, and the volatility involved in these things, okay? So here's the link that will take you to Forex Factory if you want to look up and do a little bit more research. So remember what I told you. There's federal funds rate, there's FOMC economic projections, there's an FOMC statement, and there's an FOMC press conference. So let's break these down. Let's learn what each one of these are so we have a better understanding. So first we're going to get the federal funds rate. The federal funds rate is the interest rate at which depository institutions lend reserve balances to other depository institutions overnight. So this is the overnight lending rate that these depository institutions lend other banks, okay? It's a key tool used by the FOMC to influence economic conditions. For example, lowering the rate today, like if we get a 0.25% rate cut, lowering the rate can stimulate economic growth by making borrowing cheaper. Okay, I need to make sure that you guys understand this. Okay, so there could be a 0.25% decrease today, and what this lowering the rate can stimulate economic growth by making borrowing cheaper. So do you understand why Powell will lower the rates? To stimulate the economy? The US is going through, they're not creating jobs, unemployment is high, inflation is up, so they need to do something here in order to stimulate economic growth within you and I, the consumers of the economy. So they need to make borrowing cheaper. If I'm going to borrow money, I need to borrow it at a cheaper rate so then I can start, you know, do some spending, maybe buy a home, maybe buy a car, maybe do some home renovations. But I can't do those things when I'm living paycheck to paycheck and interest rates are high and borrowing costs are high. So they got to start decreasing these. That's why some analysts would even say 50 basis points would be welcomed in the market to really help stimulate. But I don't know if they're going to go that dramatic, that fast. They'll probably test the waters, you know, like a feeler trade, test it out, get their feet wet with a 0.25 basis point, okay? So that would make borrowing cheaper, while raising it can help control inflation by making borrowing more expensive, okay? So when things start getting out of control, then they start to raise interest rates. They don't want to allow everyone to just borrow and spend freely. That's what we saw in COVID. Excuse me. Do you guys remember in COVID, interest rates were very, very low. Everyone was borrowing. That's why home prices increased dramatically more than what they were listed for. And there was bid wars because money was cheap. You could borrow here in Canada. I'm speaking for myself because I did borrow $250,000 and I got it for 1.69%. Are you kidding me? I borrowed $250,000 to do whatever I want with it. If I want to invest in a business, if I want to do whatever, I put it in the stock markets and I flipped it. But I was paying 1.69%. So you don't think I can get a 1.69% interest rate return by investing in the stock market, and I can pay back that loan, pay back the interest, and accumulate and compound more money? That's when money was cheap. It was easy to borrow. So guys, it's not just about these interest rates. You can do investments with these if you really know what you're doing, okay? And again, I'm not a financial advisor. I'm just your Uncle Ron helping you, giving you some helpful advice, okay? And these are the things when we get into the Zoom calls and the lifetime sessions, this is where we can really, really start to learn a lot more about trading, okay? And other things that you can do with money to help grow and compound in other things that you can do here, okay? So that is the federal funds rate. So we've already talked about the number, okay? FOMC economic projections. Remember, there's only a few FOMCs that have the economic projections. This is one of them. That's why I'm saying that this is a very important one. The FOMC we had last month did not include this economic projections, okay? So a lot of traders don't know that, but that's why you got to learn a little bit. So these FOMC economic projections, these are forecasts published by the FOMC following their meetings, typically on a quarterly basis. They include projections for GDP growth, gross domestic product growth, unemployment rates, inflation, and the federal funds rate over the next few years. Okay, so this is forward looking into the future. These projections provide insight into how the Fed views the current and future state of the economy and their likely policy responses. Okay, so that will be today. There will be economic projections, and you can see they're projecting for things to come in the next few years. So this is forward-looking guidance. Okay, FOMC statement. Then we're going to have a statement come out today. The FOMC statement is released immediately after each meeting. Okay, so it's released after each meeting, immediately after. It provides details on the committee's decision regarding interest rates and often includes an assessment of economic conditions, risks, and future monetary policy direction. For instance, if the statement indicates concern over rising inflation, it might suggest future rate hikes. Okay, so that's why we got to listen to forward guidance, guys. That's what drives the markets, is the forward guidance. The rate cut of 0.25% is probably already baked in. Like 99.9 of us, 99.9% of us on this call are probably expecting a 0.25% decrease. Okay, so the market has probably already baked that into trading the last few weeks going into this. So we want to listen more for future guidance. Are they going to do rate hikes in the future? Maybe more cuts in the future. So this is very important, guys. And then finally, the FOMC press conference. Okay, so remember we have some FOMC meeting minutes, and that's when I keep telling you guys this is just a summary of what happened the previous month. Powell is not speaking, and everyone thinks he's speaking, and I got to keep telling you guys it's just the minutes, it's a summary. This one now is an actual press conference. So this is Mr. Powell will come to the podium over here. It'll look exactly like this picture right here. So this will be 30 minutes after they release all of this information. Then Mr. Powell comes at 2:30 p.m. and this increases volatility. He can come and he can do a hiccup, he can sneeze, he can cough, he can fart, and the markets will move up and down just when he comes out. Sometimes there's betting on his tie color. What his tie color will move the markets. Okay, so I'm telling you, this guy is very powerful. Okay, is very powerful in the markets globally. This is the U.S. Federal Reserve, and a lot of currencies are trade against, trade with the US dollar and borrow against the US dollar. Okay, so this is not just for you and I as consumers. The whole world can be impacted by this. Okay, so it's not just us here in North America that are worried about these rates. This is global, guys. This is big. Okay, so you have the FOMC press conference. Following some meetings, the chair of the Federal Reserve holds a press conference to elaborate on the decisions made and answers journalists' questions. This offers deeper insights into the Fed's thinking and can significantly impact financial markets based on the chair's tone and commentary. Okay, so you got to listen. You got to really listen, pay attention, okay, to his tone of voice. Is he hawkish, dovish, forward guidance? Listen for clues, what he's saying, because it could help you trading for going into October, November, and December to end this year, okay? Frequency and effects. So I'm going to just briefly go over this really quickly. Frequency, the FOMC meets 8 times per year, approximately every 6 weeks, okay? So you can see this is not an everyday event. This is not every week. This is only 8 times per year, okay? Effect on the US dollar. Changes or hints at changes in the federal funds rate can lead to significant volatility in the US dollar. A rate hike generally strengthens the US dollar as it attracts foreign investors seeking higher returns. I'm going to repeat this one more time so we're all on the same page and we understand this. It affects the US dollar. A rate hike, okay? Today they're not suggesting a rate hike, but if they did, a rate hike generally strengthens the US dollar as it attracts foreign investors seeking higher returns. Conversely, a rate cut like today, they might have a possibility of cutting the rate, may weaken the US dollar, okay? So that's kind of how the playbook looks like. It doesn't always follow this playbook. I've seen times where they cut and it strengthens the US dollar. I've seen times where they hike and it weakens the US dollar. So this is not set in stone, but this is just a general guideline, okay? Importance for traders. You and I are traders. Why is this important to us? Understanding these decisions helps traders anticipate currency movements. Interest rate changes affect everything from exchange rates to stock and bond prices, impacting global financial markets. All securities are affected by this, whether you're trading gold, silver, crude oil, US dollar, pound, euro, if we're trading Tesla, Nvidia, or Apple. Anything is affected by this, okay? Tips and reminders for traders. Let's stay informed. Keep track of the FOMC schedule and be aware of consensus forecasts leading up to meetings. Risk management. High impact news can cause volatility. Ensure you have stop loss orders in place and manage leverage carefully. Okay? Interpret carefully. Focus not only on rate changes but also on language changes in statements or projections that indicate sentiment shifts. That's why I say, guys, you got to really pay attention to what he's saying. Yeah, the numbers are important, but more so is his speech after and his guidance. So watch for surprises. Markets often price in expected outcomes, like what I'm saying. The market could have priced in this 25 basis point cut. So unanticipated actions or comments can lead to larger movements. So what I mean by that is if there's something like out of left field, just comes out, they drop it 50 basis points. That's a big significant difference from the quarter basis point forecast that they're looking at. What if there's a hike? Like a hike is, no one is considering a hike right now. That would shock the markets. If they hiked, if he came out today and increased it 0.25%, the markets would be crazy, okay? So just think about that, like those are the things that you got to look for. Not just the stuff that we're anticipating, that's easy. It's those stuff that, are out of left field. That would really cause a shakeup in the markets, okay? I don't think that he's going to do a rate hike, but again, it's not off the table. I would only put a couple percent to the rate hike. I'm leaning more towards the cut, okay? Technical and fundamental analysis strategies, technicals, support and resistance levels. That's why it's important to do a top-down analysis, figure out your higher time frame levels of support, resistance, your demand areas, your points of interest, your points of control. We're going to do that. So again, you got to know your news, but you also got to do some technicals to understand if the prices go into those supply zones or come into these demand zones. That's where those big buyers or sellers could be positioning themselves in those blocks in the market, okay? Identify key levels where the price has historically reacted during past FOMC announcements. So this is part of a review. If you want to do homework, I know some snipers last night messaged me and said, Ron, I reviewed last FOMC we traded and I saw how it traded, and that's perfect. That's excellent. So you can see the reactions, measured moves. You can see how did it react? Was there a fake out? Did it move clean? How big was the range? So you can kind of anticipate what to look for on this FOMC event, okay? So you can always look back at past events and do some review, back test those, see how everything performed. These are the things behind the scenes that a lot of traders do, but goes unnoticed, right? No one, it's not fancy if I come on a YouTube call and we go back and we look at last FOMC and we do, because then everyone's going to come in on YouTube and say, where are we buying? Where are we selling? Why are we not trading? It's a different kind of mentality. You got to go back and learn. Not everyone wants to learn. It's always just about buy, sell, buy, sell, buy, sell. And I hate that. I hate that. I am a trader that learned from the past. I still do. I do these stuff, but I know it doesn't get a lot of love on YouTube if we do those things. But it's very important, guys, to go back and do some research, right? It's part of your homework studies. Volatility indicators. Use tools like the ATR. This is an indicator. It's called average true range, ATR. Some of you guys use this, some don't. Some of you guys have never heard of this. This is a volatility indicator, okay? So it gauges the potential price movement ranges, average true range. Like we can measure an average candle and find the true range, true volume of an average candle. That's how I trade too. I look for abnormal size candles, maybe 2, 3, 4x the size of a average true candle. Then I know substantial volume came into the market, and then that's where I maybe base a point of control off of those abnormal sized candles. So you can get it. There's indicators that can help you out. There's the ATR, average true range, chart patterns, chart recognition, pattern recognition. Look for breakout patterns preceding FOMC announcements indicating investor sentiment. Finally, fundamentals, economic indicators. Analyze relevant economic data such as inflation, employment figures, and GDP growth leading up to the meeting. Fed watch tools. Use tools or services that predict the probability of rate changes to form expectations. Finally, there's cross-market analysis. Consider correlations between currencies, equities, and commodities that might be influenced by FOMC decisions. By combining both technical and fundamental analysis, traders can better navigate the complexities of the market reactions to FOMC events, okay? So that's a little bit of a breakdown. I know some of you guys are sleeping on the call. Some of you guys have unsubscribed. Some of you guys have left as soon as I start talking about the news and education. I've been doing YouTube for a while, guys. I know how it works, right? But I'm gonna continue doing what I do. I'm all about educating and learning, okay? So that's up to you. If you wanna learn this, I'm well versed on this stuff, but if you want to learn, that's why you're here. If you don't, I'm not going to force you guys, okay? If you guys are having fun and you guys are learning, please hit the like button. There's 415 viewers. Let's see if by hitting the likes we can get it up to 500 viewers today. And let's also aim for a nice psychological target on our subs. Right there. Let's see if we can get 25 more subs and get this to 85,500. That would be a goal for today, okay? So, guys, are you guys ready? Let's get into the charts. We're going to start off with gold. If you got some coffee, have a break right now. Drink some coffee. And thanks, everyone, for joining. So, good morning, everyone on Zoom. Welcome, guys. Justin, good morning. Thanks for joining. Welcome. Mickey, welcome. Thank you. Is it Mickey or Mikey? SSDN, welcome. Owner, good morning from Boise, Idaho. Boise, Idaho, is that the home of the potato? I might be wrong, but isn't Idaho the potato? The Idaho potatoes, famous for the potatoes. I love Idaho potatoes. Conrad, good morning. Welcome, guys. Tim, good morning. Danny Absock, stop with that. Okay, we're rebuilding. We're gonna, believe me, Montreal's gonna win the Stanley Cup in 3 to 5 years. Okay, I'll bank on that. It's my forward guidance. Wayne, good morning. Welcome, guys. Sorry to, I'm not a Manchester United fan. I didn't want to offend you guys or insult you guys. But they got to get a new coach. They got to get a new system. Yeah, they almost got relegated last season. Wow. Good morning, Samuel. Welcome. Pramelo, good morning. Captain Boom. Yeah, you coach your son's footy team, so I'm sure, Boom, you got a system the way how you teach those kids. So now you got a system when you're trading, and you're doing really well with your trading. So that's what it's all about, guys. I kind of use trading with sports, analogies, and that's what made me a better trader, because I love sports too. So I kind of tied everything together. You got to be very disciplined in sports. You got to get to be Michael Jordan. He was out there on the courts 6 a.m. Eastern when all the other players are sleeping. He's out there warming up, practicing his free throws. That's why he is the greatest basketball player ever, right? He put in the time. He put in the work, just like us. You got to put in that work in reviewing. I know after a trading session, last thing you want to do is go back to the charts and look, but that's what will take you to the next level as a trader. Some traders put in more time and dedication and sacrifice. Others half-ass it, and results speak for themselves. So, I'm not here to force you guys to do anything, but if you can learn that discipline, just with anything in life, you're going to become that much better of a person, okay? There's others that are working throughout the clock, don't sleep, and they don't make excuses. They just keep going. They're wired differently. I'm wired like that too. So I've just learned it at a young age and never stopped. So hopefully you guys can get that as well, okay? Okay, guys. So, and thanks everyone for on YouTube. We do really appreciate you guys. We could not have found anybody without you guys on YouTube. So you guys are a big part of this, okay? Everyone that's here found SST through YouTube. So you guys liking, subscribing, sharing the channel, that's how you found us, was others that were doing the same thing. So can you guys just help us pay it forward? We pay it forward to you, pay it forward to someone else. You know, there might be someone right now that's a struggling trader, has never traded FOMC, struggling, and maybe a link will pop up for live trading and education, and maybe help them learn and to be a better trader. Okay, so that all starts with you guys. You know, we can only do so much here, but we do appreciate it. So again, welcome Joski, welcome, thank you, appreciate you. Justin, Cash, welcome. Thank you, Yared, Frank, Arshad, welcome, guys. So everybody on there, I can't list everyone's names, but we appreciate everyone. Okay, thank you guys for all the support. Amazing, guys. Okay. Sorry, I was just getting started here. Cash. You guys don't have to donate, guys. I tell you guys all of this all the time. We do appreciate it. It buys me a coffee, but please don't do this. You guys don't need to do this. But Cash, I appreciate everything you do for us, boss. Any advice for a losing streak? Also, where can I learn SST? You can learn SST here at YouTube daily, or join our team at stocksnipertrading.com, okay? But to answer your question, advice for a losing streak. Okay, do you guys mind if I answer his question? It'll take a couple minutes, but you know, we've all had losing streaks. This will take me 2 minutes to answer this question, guys, but everyone just please pay attention, okay? We'll get to the charts, we'll get to analyzing, no problem. But this might be for everyone on this call. I've had losing streaks. Manchester United is having a losing streak right now. We just talked about that in sports. It happens, right? But there's got to be a rebuilding phase. You know, I'm using Manchester right now. I'm picking on them because we just talked about it. So they need to reshuffle, maybe get a new coach, maybe figure out a new system. Maybe the players are not playing well together, so you got to maybe trade a player and get a new player in to complement the team, okay? That's for sports. But now let's talk trading. Let's talk trading. If you're in a losing streak, okay, what we can do is stop compounding the problem by continuing to trade when you're in a losing streak. If you're in a losing streak, you're in a losing streak for a particular reason. You're probably not reading the market correctly, and you're just trading it to make everything that you lost, make it back. And when you're not focused and you're not reading the market, you're probably going to compound that and continue even losing more and more and more, and you're kind of digging the hole deeper and you can't get out of it. So what I would suggest, if you are in a losing streak right now, stop trading. Stop trading. And no one wants to hear that. That's probably the worst answer I can tell people. If you're in a losing streak, Cash, stop trading right now, okay? Stop trading. Now you got to go back and review what caused you to be in a losing streak. Go over and review every single one of those trades and learn from them. And then it will be like a light bulb. It will click. You'll maybe figure out you were buying when it was a downtrend and you should have been selling. You know, it might look obvious when you review it. Maybe you're trading against the trend. Maybe it's your emotions. Maybe it's your psychology. Maybe it's you don't know how to handle yourself when you're in a losing streak and you keep going into the markets and you keep trading without learning what caused you to make these losses, okay? So my answer to you would be to stop trading right now. Go back and review. Maybe take a week off. Take 1 week off of the markets. The markets are here every single day. They're not going anywhere, okay? 1 week off is to regroup, get your focus back, go back, learn from your mistakes. Do you even journal? Do you journal anything? Do you journal your entries? Go back and review your journal. And each one of your losses, there's got to be a particular reason why we took a loss. We got to figure it out. We got to dissect. We're surgeons, right? So we got to go back to the problem and figure out the cause of it and fix it. Just like a doctor. You know, if I'm sick and I go to my doctor is going to diagnose me. He's going to figure out what the issue is, and he's going to fix me with either medication or whatever it is. But it's the same thing with trading. If we're losing, we can't just keep going back in trading without figuring what the problem is. So we have to go back and review. Just like if you have a car and you start your car and it's making noises, you got to take it to a mechanic. The mechanic has to diagnose it, see what the problem is, and fix it. So same with us in trading. How come when we're fixing our cars, it's no problem? We go to the mechanic, we get our cars fixed, we pay the money. Why is it when we're sick, we go to the doctor, no problem, we get taken care of? Why is it when it comes to trading, we cannot correct this stuff? We just keep compounding the problem. Like if you got a car that's not working, maybe there is some people that will continue driving it until it breaks down and it can't go anymore. But there's other people, as soon as they start to see the check engine light come on, they will take it to a mechanic, a professional who knows what he's doing, and diagnose it. They got diagnostics, they got tools to do that, and he will fix the problem. So when we are trading and we're in a losing streak, we have to stop trading and go back and diagnose the problem. Go back and look at our losses, figure out what we did. There's always going to be a reason, okay? I'm good at this. This is why we help snipers. We have one-on-ones, and they show me their journal. They show me what they're doing. I kind of help them fix everything, and then we get things going again. So that would be my advice to you, Cash, is take some time off, review, and then when you come back in trade, start building your confidence again. Start small trading. Don't worry about the money at this time. Right now, the money is gone. We've lost it. Now, how can we get it back? You got to slowly get your confidence back. You got to start taking trades again, smaller, and then once we hit a target, and then build off of that, then maybe you might take another trade, and then you're 2 for 2 for that day, and maybe that can stop the losing streak. It's kind of like in a slump in baseball, right? Or in basketball. If Michael Jordan is in a slump and he's not hitting his 3-pointers or his outside shots, what do you think Michael Jordan does? And Kobe Bryant, they don't just sit and keep taking threes. They're going to make an easy shot. They're going to try and get a layup. If you guys understand basketball, you go in for a layup, it's probably the easiest, or go to the free throw line and start with free throws to get your rhythm, to get your confidence back, and then he's going to start getting the flow and then start shooting the threes again. Okay, it's just like with anything. If we're in a slump in trading, we need to stop, diagnose the problem, and when we start up again, start small with get a layup, get a free throw, and then go for your next trade. Start small, regain your confidence. Once you get that, then you can continue trading. Okay, guys? Sorry for that long answer, but that's a great question, guys. That's a good question, and not everyone is in a winning streak right now. Some traders are in slumps, and we're here to help. Okay, so I understand. I was in a slump myself when I started trading, but I had to go back and be real with myself, stop trading, figure out why I was losing every day, and I found out that I was just simple things. I was trading against the trend. I was trading with improper risk management. I was forcing trades. I was trading on impulse. I was trading during high impact news events without even understanding what the news meant, right? So all of these things put together is a recipe for disaster, and it's a recipe for a losing streak and a slump. So you got to get out of the slump by slowly getting yourself out. You're not going to recover everything today and just go all in on FOMC and hope for the best. That might get you out of that slump. You might get lucky, but you haven't learned anything. You haven't learned how to diagnose a problem. What if that slump comes back again down the road? How are you going to handle it, right? If I have a losing day or 2 losing days, that's it. I correct it right away. It's just like a car. If I have an issue with my car, next day I correct it. I don't play games. I don't wait a week, a month, a year for that to compound. Okay, that's how I am. Even me, if I'm sick, right away I go to the doctor and I get fixed. I don't wait weeks and months because that could compound the issue. Okay, guys. So sorry for that long rant, but hopefully that answer helped you, Cash. Okay, and we're all here. We're here supporting you, but if you're in a slump, just take it easy right now. Start to, go back to the basics. Start to figure out how you got there, how to correct it, and move forward slowly. Once you start getting that confidence back, and maybe you start hitting a couple days in a win streak, then you can go back to your regular trading and recover and go back to. And then when you recover, let's say, for example, you recover the slump and you're back to break even, stop at the break even. Now, refocus, reshuffle, and figure out everything, how to go from there, okay? So let's get started now. On gold, on the daily, right over here, look at gold, we have a bearish candle coming down, okay? So we have some bear candle coming down from these all-time highs up here. So just to go over on the charts real quick, remember this was previous all-time high, 3,500. We hit this right over here. It was back in April 22nd, okay? So since then, you see that this previous all-time high, 3,500, is now a point of interest of support, and the volume is above, okay? So we're well above this. We have one zone, one block that I've always mentioned back here. This was our zone where we figured out those two bodies. We stretched the supply into the future, and we came across, and you can see how it got rejected right there, rejected right there. Finally, it closed above during end of August. So that's when we can flip the zone to green. Right there. So you can see basically how the entire, look at months of April, May, June, July, and August. So look at all of this consolidation we've had in here. Okay, so this is like when you talk about a higher time frame bull flag. This is basically like a monthly bull flag. Basically, you got April, May, June, July, August, about 5 months of just going up, down, up, down, up, down, up, down, up, down, and finally they broke it out. And notice the ascending motion, like it's going up. It's making, from this was a pullback, it's above all of this. That was a pullback, higher low. That was a pullback, higher low. It's ascending. That's an ascending motion. There's the flat top up there, and then there was the body that closed above and broke out. And look at now the redistribution of gold volume to these all-time highs, okay? Yesterday we hit 30, just above 3,700, okay? 3,702. So with these zones, stretch them into the future, okay? Keep stretching them in the future, keep stretching them in the future. Will we ever revisit these? Possibility. When we revisit these, the easiest way is I go exactly halfway. You can go at the top, mid, or bottom, whatever you like. I go 50%. You saw yesterday how it worked. We hit the 4-hour gold trade in that point of control from Europe right at that. I went in a little early, but still recovered that trade into profit, but it was ideal to enter right at 50%. So right there, 50%, add an alert. Okay, is it ever going to come back in here? I don't know, but when it does, I at least want to be ready for it if it comes in there. First thing it's going to test is this. Like that was the previous all-time high, 3,500. That was resistance, and then now we got volume closing above. So if it comes in there, maybe there, 3,500 would be where the buyers are, right? That's a point of interest, but that's a deeper zone in there. If it comes in there, that's where the bigger buyers would be, okay? So we're nowhere near this, but it's just to help you guys with learning a little bit more about charting and things like that, okay? So let's just continue following this parabolic move coming out of here. You see there's single bullish candles continue to make higher highs and higher lows. This was a big bearish day that came down September 4th. It came down, but near the end of the day, it caught that wick right above that 3,500 and buyers rejected it back up and it closed right there. Next day, we continued that bullish momentum. Again, this was a previous all-time high we hit. They brought it all the way down like a shooting star candle, but you see the sellers could not really penetrate and close it down below here. It came down and the buyers kept buying it up. It bull flagged and continued to go, okay? So there's a lot of points of interest and bodies to look at down here. One area that I'm particularly looking at is right over here. This bull flag, right? And then I talked about this yesterday, how I kind of define this area. So I can see that bullish candle came up, closed right there. This was a bullish candle that came out, all-time high, previous all-time high, and look at where it closed right there. So see where I'm making my zone right at the bottom of that shooting star candle, and then the next one opened right there, small wick, came back up. Look how it came up, and then they rejected it back down. So the volume, blue volume, black volume, blue volume is inside this zone. Next day, this was bullish. See, impulse came back down, impulse down. Look at where the volume closed inside the zone. Again, this blue candle impulsively broke out, closed right there, and then this candle opened bearish, came up, higher low, still moving up, and then broke out of here, filled all of these wicks. You can see it filled them all behind and created that all-time high, came back, closed. This was yesterday. So if we're following yesterday's volume, let's just continue with this. Let's follow yesterday, okay? So where did we open? We opened right there yesterday, point of interest. 3677. It was initially bearish with that small little tiny pullback wick, came back to the opening balance, we pushed, we broke out the previous day's high and all-time high, and that's weekly high Monday, and we came up, there's our new all-time high. Okay, so remember our target yesterday in that trade, we were targeting 3700. So there's, you know, psychological number 3700. I'm going to use orange line for our new all-time high, 3703 to be exact. This is spot forex. This is not futures. Futures, you know, probably has a different number. Futures trade differently. So when we hit it, all-time high, we came back down, we closed with some bullish volume. So now I can see my closing price yesterday and I can see my opening price today. There it is, yellow line, point of interest. So I can see that they didn't gap up or gap down. It was a clean transition from the closing price to the opening price. When it opened, it was bullish, bullish, bullish today. So let's place a purple line at today's highest point on gold. And is it equal to the all-time high? Is it higher than the all-time high, or is it lower? It's obviously lower. It came up bullish, bullish, bullish. You see, they've already pushed it down, so they're protecting the high, the all-time high, by pushing it down. So we have a lower high. The sellers pushed it right back down to the opening balance, and you can see that the sellers now control today's volume. It's pushing down, pushing down, pushing down. That's our lowest point of the day, 3660, I would say. So there's where I place a purple line. There's my wick right there. You can see we got a tiny wick. So buyers are coming in right there, but they got to continue to push up and reject all of this bearish volume. Maybe get it back up to this yellow line, the 3677, and see what happens there. If they can flip that, then we're coming back up to the opening balance and maybe flip the wick, and then gold is going for a new all-time high. However, this is a big bearish candle coming down now, so it could continue to break this low and drop down, and here is the green zone, right? See that green zone? I told you guys the size of it. I'm stretching it now into the future. One thing I want to do is have a yellow line exactly at 50%. I'm assuming that that's 50%, and I'm also looking at that body and that body. We don't need to guess where 50% is. Grab your Fibonacci tool from the bottom of the green zone to the top of the green zone. Remember, it's this size for a specific reason, I told you. So you see how perfectly that yellow line lines up with that body, and the 0.5 at 3633. Okay, so if it comes deep down into here today, like for example, if this bearish candle breaks the low and keeps coming down, it's a black candle coming down, maybe it will retest the top of that green box, 3642. But if it comes all the way into 50%, that could be an area where buyers are waiting to buy that pullback. Okay, if it cuts right through this zone, it could close below here, and then like today or tomorrow or sometime this week or next week, if gold closes below there, we invert that zone to red. Maybe we'll come in there, retest that again, yellow location, 50% of it, but now it's a red zone, and then we get that push down on gold, right? That could happen, but we gotta, it's levels to get down there. Okay, and then one other thing is, see this big bullish candle? Guess what I'm gonna do? I want to find out 50% of this, because I think we're tapping right into 50% with today's low, and then maybe I want to figure out the bullish point of control off of this. So again, Fibonacci from the opening of this candle, this was a significant candle. This is the candle that filled every single wick to the left and closed above. So you see, guys, look at today's purple low. It is exactly 50% right now of that bullish day's candle on Monday to start the week. So there's now my bullish point of control right there, the 618382, and there's my now bullish point of control zone. Stretch it into the future again. So we can see right now we are trading right into 50%, and we got a wick coming back up. So now what we got to do is kind of go to lower time frame, 4 hours, see how volume is moving from Europe and coming in. So when we're looking at RSI on the daily, it is very, very overbought, okay? And maybe it will push back down, but could come right back up. So this is basically one top so far. So you can see this rally, this move that came up, one top. We are pushing down now. Will it find the neckline right here in this green zone? Will it find the neckline down in this deeper zone? So for example, in either one of these zones, let's say maybe down here, it finds the zone. It could come back up, and is it going to come all the way back up to the double top all-time high, maybe break for a new all-time high, or come to a double top and then start pushing back down. So you see then this neckline is very, very critical because that's the M pattern, and that's where it could possibly break and start selling, right? That's a double top. It could also be maybe a lower high shoulder, where if it's coming back up for that double top, sellers from the all-time high could be lowering their offers right here and then have a lower high shoulder and continue pushing it down with that lower high. Or it could come right into this one. When it's coming in here, this will be a red zone as well, and that could be the lower high shoulder, and that would give us the clue that maybe sellers want to break this and continue to push it down, okay? So that's how gold on the daily is set up. We have a big bearish candle coming down, but we're still very bullish on the rally. So this could just come down again, pick up some buyers that are pending and go back up, right? Or it could be a very bearish day coming right through here, okay? So on now, breaking this down on the 4 hour, let's go look at the 4 hour. Okay, so 4 hour candles now. Now we're dissecting. Again, we're like surgeons. So we're dissecting the daily candle. We're cutting it into pieces. If a daily candle runs on a 24-hour cycle and we divide it by 4 hours, then we're going to get 6 by 4. So 6 4-hour candles consist and make up one daily candle, right? If we go to the hourly, 24 single 1 hour candles make one daily candle. There's 60-minute candles. We can figure out how many 30-minute candles make a daily candle, how many 15-minute candles, how many 5-minute candles, how many 1-minute candles, okay? You can continue to dissect as much as you want. Here we can see this nice big 4-hour strong bullish rally coming up, higher high, pull back, higher low, pull back, continue to move, higher high, pull back, higher low. But when it came back up here, it didn't break for that new high. So lower high, they pushed it down. They broke right there, but it was a quick little break, and then it came back up. We traded inside here. Now we look at Monday, start of the week, very bullish. Monday, 6 a.m., continuing in New York. We pushed right through here. Tuesday, and then this is when we started to retrace down. It was Tuesday coming down. That's when we hit the all-time high, was yesterday at 10 a.m. And then since then, you can see it's pushing down, came back up, lower highs, push right back down. Here's the futures market, you know, right over here. Then we move into, here is Europe volume, okay? So coming from Europe, this 4-hour candle right here. From 2 to 6 a.m. Eastern, that's pre-London, London, Frankfurt, Switzerland, going into New York at 6 a.m. So London, I can see for gold, was very bearish. It opened, lower high, continue pushing down, came into that green zone, found some buyers and closed right there. So look at our next transitional 4-hour candle, opened, came up just a little bit, lower high, took out that previous low, made a new lower low right exactly at 50% and finding a wick. So are we going to see gold maybe come back up in the next 4 hours to test this yellow line? Is it going to go back up here, or is it just going to continue to break through here and maybe drop even further down? Okay, so we are at a significant area where we're trading in this zone right now. One other thing I'd like to look at is, you know, these are daily points of interest, these yellow lines, but also this 4-hour candle coming down from Europe is very important. So can we find the bearish point of control and 50% of this 4-hour candle? Remember, we did that yesterday and we traded right exactly into it. So why stop? Let's get in a daily habit, daily routine of doing it again. So there was the opening balance. There's the closing balance of this candle, right? Now I can specifically see exactly where's 0.5, 3,673. When I go to anything on the 4H or 1H, I use a white line. The white line tells me that this area, this line is letting me know that I base this off of a 4-hour or 1-hour candle, okay? And then there's my point of control right there. It's a big bearish candle that closed below. So that point of control is representing sellers. So I stretch it into the future. I can see that this candle just opened up bullish, but did not transact inside this block yet, okay? So what I can do is I can make an alert at that white line, add an alert. If it does come back in there today, I could be looking to possibly take a trade. So if it comes back in here today, let's say for example like this, maybe that's where sellers will, you know, are pending, fill, and then it will continue to go back down. However, if it's coming up strong and cuts right through here, and closes, let's say, above there, then we flip that zone, we invert it green. It might be coming back here to pick up the buyers now because the zone flipped, and then we could be continuing to move back up, okay? But we do have to recognize that that is a point of control coming from Europe, and it is still above us, and it still has not been transacted in, okay? Came close with this, but then that was a lower high, continued pushing down, okay? So this 4-hour candle is going to close in the next 2 hours and 40 minutes. So what we can continue doing is go to the hourly and start dissecting the hourly now, okay? So if we're just looking at pattern recognition, what do we see? We see this peak that came up, all-time high, and then we got a leg coming all the way right back down, okay? So what's next? Are we going to continue to break this a little lower? Is it going to come down all the way down here, or is it going to stop here? And then we're going to start to see a leg coming back up again. And if it's a strong leg coming back up, it's got to test this point of control. Okay, it could definitely break out of there and go to the next one, or it could just come right in there and then they push it right back down. If it comes back down, then we look for either will it break a new low or will it be a double bottom? And then if it's a double bottom, traditionally the second leg has more volume, more buyers, picks up more orders, and this is the one, the second leg, that has the momentum to break this neckline and continue to drive higher. So you see, guys, how that pattern recognition, if we come in there, we could come right there, there's the neckline, they push it back down, then we look for a double bottom to continue, or if they break it down, might be that lower low, close below, and then you're flipping that, and then you're selling back down, okay? So just follow candle by candle. Right now, it's moving down, but we caught a wick coming back up. So let's go to the 1H and see now. Okay, so now we're breaking down. Look at that big 1 hour candle was Monday at 11 a.m. And then I can see a lot of consolidation, but it continued flag, bull flag back up. I can see now exactly what time of what hour it was. It was Tuesday, 10 a.m. when we hit that all-time high. Since then, it came back down, retraced back up. There it is, lower high. They pushed it down, big bearish hourly candle, Tuesday at 2100. So you see where it came back up and retested? 50%, guys. Guys, get in the habit of doing this. This is this candle is irrelevant. This black one, this blue one, black one, blue one. See how there's no real volume and they're just barcoding? I wouldn't base any analysis off of these ones. This one, yes. This big blue one, yes. This big black one right there. Look, this is the one that closed below all of this structure, right? That's a statement candle. All you have to do, okay, so look at what I'm doing. I'm doing the same thing I do on the daily, same thing I do on the hourly. I'm going to show you how I do it now on the hourly, and I'll show you how I do it on the 5 minutes, okay? This is why. When you understand how to do this, all candlesticks have the same characteristics. That's why you just choose what time frame you enjoy trading, okay? Look at this. Had you done this, you could have set yourself up for a pending sell. How do we identify this? Okay, can we all do this? You should be becoming pros at this now. Opening balance of that candle, closing. It's a 1 hour candle. So it took 60 minutes for this candle to open. It made a high, it made a low, and it closed right there. Can we determine exactly where's 50%? I can. By using this simple tool, there's 0.5. Okay, I'm on the hourly, so I use a white line. If I want a zone, same thing. There's my hourly point of control. Stretch it into the future, right? Look at now. I know this is, now someone's going to say, well, Ron, this shit already happened. It's easy. Yes, but this is how you got to do your analysis to get ready for another easy one in the near future, okay? So see how I'm setting up my charts? And then you see that candle right in there. What time? Wednesday, 1 a.m. Look at it. Bullish, 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 bullish. It came right just above 50% in that entire point of control. Look at the results now. This is where you learn. What were the results? It came in there strong. This was a really strong bullish candle. It opened. It was blue, 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 right in there. And look what happened. It got rejected. All of these sellers in there were pending. They got filled. And look at the results now. Look at the effect when it came in there. It got rejected and it came back down. Sellers are, offering to that big blue candle, pushing it down, bring it down to the opening balance where it opened bullish ignited and flipped it where it came down bearish, bearish, bearish down to that lowest point right there. And then the buyers at the end came back up, and then it's kind of like a bearish spin top. But with that rejection and that trend going down, it continued to push down all the way down where we just came down 6 a.m. to that lowest point of day, and we've just retested it. And now look, we're barcoding where it's bearish and bullish. This hourly candle is going to close now in 35 minutes, and it's already engulfing the previous candle. Will it stay engulfed? Will it completely, or will sellers push it back down? Okay, look at the wicks above us. I got a lower high, and this red zone right there. Okay, so right now, you see how right here, this is a really important point of interest. See how I have a wick, a body close, a body open, and the body right there. Let's put a white line right here, please. Right there, okay? 3, 6, 6, 8, okay? I can see now we've already retested this. 4 a.m. got rejected. 5 a.m. we impulsively broke through here, then they rejected it back down, and it closed right at that white line. 6 a.m. it was bullish, it came up, lower high, and they rejected it. Look, it came all the way down bearish and was a low of the day. And then we just kind of opened right there, came down, hit the lowest point of the day, and we got a nice big bullish engulfing candle coming right back up. There's a wick impulse break, but it's still lower than that one, lower than that one. Will this blue volume close above this area? And then can we build off of this to take us up to that red zone, or are sellers going to come in and push this back down? Okay, so right now we're barcoding. Look at it right at this big zone here. Okay, so this could be, look at, now when we look at the hourly, bigger perspective, we came all the way up. Look at it as all one big move to the all-time high, but more of the volume is just concentrated right here. And consider this all one big hourly leg coming down, right? Look at where we're coming down to the neckline, to this demand zone. Now, is it going to continue to go back up and we test this red box? Will it come back down? Big double bottom, second leg is the stronger one, and continue to go. So you can see on all time frames, you're looking for the same exact pattern recognition, okay? So I can see now they've rejected it and they're pushing it back down. This candle is going to close in 33 minutes. So we have a lot of time to wait and watch this thing. Or we can just go right into the 5 minutes and watch how the 5 minutes are trading. So I can see that the 5 minutes, what time they hit the high of the day, you know, I can start to see all this. This is when, right over here was the opening day, came up. It was initially early, we hit the highest point of the day, and since then, selling all the way down. Came back up, right into there, red block, 5-minute candles, continues selling all the way down. They're getting really choppy, but they're still making lower lows, lower highs, lower lows, lower highs, lower lows. Kind of consolidated right there, had that big push up, but they pushed it right back down and came back up. It came deeper down in there, and we're curling right back up. So you see, this is that hourly white line that we're looking to get volume above, okay? So is there a trend coming down? Like, if you want to look at a trend, you can start it from right there, like the purple highest point of the day. So you can connect one point to the next point. Like from right there to this point, that's point A to point B, okay? Now just continue extending point A to point B into the future, okay? So there's the trend coming down. And it's located right at that red zone. So what happens if it comes in here bullish? Right up there, and then they reject it back down. Okay, we could possibly break the trend, close above there, flip that zone green, and then we could be driving to the next zone. Okay, but we're still in a bear trend on these 5 minutes. The market is still pushing down. Okay, I can start to see another trend. I can connect the bottom right here. So I can connect right there. I can connect right there, and I can continue into the future. Okay. So you see now the parallel channel we're in, where it came down, found support at this green zone here, which was green, came back up, top of the parallel channel, red zone, pushed us right down, kind of consolidated in there, pushed it all the way down, holding. See the wick right on that yellow line, continue coming back up, kind of came back down, still holding this, and it's building its way back up, okay? So this is kind of our trend formation, right? We can add now a few indicators to help us out. We have our SST daily bar indicator right over here. So this big black candle is representing today's daily volume. So we know it opened right there. Initially at open is when we made the highest point of the day. It was early. It was right there in the futures market. And then quickly got rejected. And we've been pushing down, pushing down, pushing down. I can start to pinpoint pre-London. There's London market open 3 a.m. right there. London sold off. It continued to sell, sell, sell. And now I can see right here, 7 a.m. We found the bottom and we're coming right back up. Okay. But we are still, if we go in buys, we are still trading against the overall trend. We're counter trading, but we'll see if it starts to turn back up. Okay. So first thing is, can we get a 5-minute candle that closes above this white hourly line? It's going to close in 30 seconds. Let's see. Okay. And also add some EMAs. There's our EMA 9. We are currently above it, this green line. And EMA 200 is all the way up here at this daily yellow line. Okay. So that's gold, guys. Hit the likes in YouTube, guys, for that analysis. And it is 7:30 now, so you have a new 30-minute candle opening up as well. So you can take a look at your 30-minute candles. I know we don't kind of add these in our review, but if we did, I can see a 30-minute impulsively broke out at 3:30. That was just after London. Continue, come back down. I can see this bullish candle come back up, close with a little bit of volume above that hourly. Didn't really move for a new higher high, push back down, then they really push it down. So you see that 30-minute candle, very strong and bullish. Look at where it closed, right at that hourly. And then they open up the next 30-minute candle, bearish, bringing it right back down. So if this flips, I'm sure that we could get maybe some 30-minute volume filling these wicks. So on 5 minutes, if we're looking, this could be one of those, do we take an impulse trade or should we wait for the volume to close? So notice how the candle just opened here, bearish coming down, but it picked up a higher low. It's got a previous higher low. So if it comes right back up and flips as a hammer, you can see it's just got a small wick to fill, and then it could continue to backfill everything to the left. I would be targeting that body and that body. So on the 5 minutes, you know, as scalpers, just to fill, you know, if you're looking for just to fill from kind of maybe that wick to come up to that red line, that's 15 pips, okay? Because it could come right up there and that's resistance. I can see right over there, it got rejected, 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 rejected. It could fill 15 pips and get rejected back down, okay? But it could also move past that and start to fill these 5-minute wicks behind and get up to right there, that next point of interest, okay? See how the candle flipped right now? Okay, so it's flipped, it turned into a hammer. Okay, so this is where you can go down to the 1 minutes and watch the 1 minute candles. So you see this 1 minute candle that just opened bearish, it's retesting that hourly white line. If this 1 minute candle flips, it could continue just to fill up to that red line. Okay, so this could be like a quick scalp trade if you're looking for quick scalps. So I'm going to go in a quick scalp buy to test this. Okay, I could go on 1 minute candles. I could go with a really tight stop loss. Like I could go right below that body or just right below the previous wick. Okay, so I'm going to give it a little room to breathe. Okay, I'm going to put it below where these 1 minute bodies formed a little bit of structure right here. So I'm going to go with a stop loss just below there, and then I'm going to look to see if it can catch some buyers inside here and maybe come back up and fill to that red line and break. I'm going to just give it my stop loss. I'm just basing it off of 1 minute structure. So see where I place my stop loss? Just below that body and body where it looks like it could be a 1 minute neckline right below here. Okay, but I didn't get that close with that volume above that white line. So they rejected it back down. So another bullish 1 minute candle is building. Let's see if we can get some more volume closing above here. It's now that white line is acting as some resistance and rejecting the move right now. So it could continue come back down, but I see a higher low, higher low, higher low, higher low. So it's building, it's barcoding, bullish, bearish, bullish. We're getting it back above there. It's going to close in 25 seconds. So I'd like to see blue volume closing above this white line. I'd also like to see a higher high breakout because that is another equal high. on that 1 minute candle. So it came right up there to that equal point where I just bought in, and they rejected it back down. So you can see how that's resistance. I need that higher high, you know, just to continue trending up, to kind of strengthen the next body candle opening up. So we're right there. Let's see where we can close. We closed right at the high. We got an ignited 1 minute bar. So remember, we don't have too much behind us. We can maybe fill right back up to that red line. Remember, we measured the move prior, so it's about 13 pips, let's say. Let's target like 15, a whole number, if it can kind of break that, okay? So that was a higher high break. See how it opened, broke for that higher high, and then rejected it back down. So now we got to utilize our white line as hourly support, or anything higher low, or 50% of that 1 minute candle. So I can see already it got a higher low, so it's got to come back to the opening balance. Remember, it's a spin top candle right now with some indecision. Maybe it can come back up to that opening balance, close with some blue volume, and can we continue to push our way back up? So strong resistance there. When we broke out, look at now we're barcoding, like real barcoding. Now it's blue, black, blue, black, blue, black. You know, if I was to trap all this garbage 1 minute volume, it's right in there. That's the trap. Is it going to be a bull flag to continue to break out of here, or sellers? That's it. They're going to shut it down and start bringing it back down. Okay. So this is a neutral zone to show you we're in a bull flag. We're still, right by that hourly white line. Okay, we got another bullish candle. If you look on the 5 is in this flag, still building in here. Okay. So we'll continue, just watch with the quick 1 minutes here. But it would be nice to get a bullish candle closing above here. Okay, because every time it comes up, sellers are rejecting it back down. We need a kind of nice strong 1 minute close above there, and we're not getting it. Every time it comes up, they're pushing it back down. Coming up, they're pushing it back down. But notice off the bottom, okay, we got a wick, a higher low, a higher low, higher low, higher low. Can we get one more higher low? Or is the seller going to come down and break all of this structure down here and start to trade it back down in here? And then we'll see if a big buyer will bring it right back up. So can we hold? We're still trading in this consolidated zone. I hate this type of volume, so you can see the markets are just sideways right now. But sellers are still in full control, bringing it all the way back down. So my stop loss is just below here, below this neckline. I will verbally let you guys know as soon as I get stopped out. But now we got to test the depth of market. It's got to see if it can come down here and get a rejection coming back up. So we kind of closed outside of that consolidated box. So the sellers are strong. Now when it comes back in, we could see sellers continue to push this thing down. Unless the buyers can bring it back in with that volume, continue to consolidate it here and continue to build it out of here. However, now we're, the sellers won that because they closed below there. So you see how it opened bullish coming back in, it got rejected. So these sellers could reject this and yeah, exactly, turn it into a shooting star candle and now push it down further to attack the lows and take out the stops down here. So that's where my stop is. So they could come down there, take out the stops, and it could go back up, but it could also take out the stops and drop even further down. So there's two things that could happen down here. I get stopped out and it could go back up, or it kind of stops out, could drive lower. But if it closes below there, that's why I don't want to be still in this trade, because then if it retests this, then that could turn and then it drops all the way down in there. Okay, so my stop is just below here. I see it came down back up. It's got another bullish ignited candle. Can we get that bullish volume back in and trade in that zone and build it to break out of here? Or are these sellers going to win this and continue pushing it down? So you see now how it's struggling to get back into that zone, lower high, lower high. We're now 50% below that big bearish candle. So it is continuing to push down. Okay, so just showing you how strong the sellers are. Even on the 1 minutes, sellers are very, very strong. So that bullish candle that we closed on the hourly, it's showing you that this hourly white line still has a lot of resistance. Remember this hourly bar that was right here? We were right at that white line, looking to break out where we were. So again, this hourly candle is going to close in 21 minutes. I don't know if I'm going to still be in this trade for the next 21 minutes because I just entered on the 1 minute and about to get stopped out right now. Okay, so I will verbally let you guys know as soon as I get stopped out here. I know I have a pretty tight stop loss just right below this zone, but okay, so there's a wick right there. Okay, I got a wick. I'm still holding it. We need to flip this candle back up quickly now, turn it blue in order to come back up because it's got that bearish head that could continue to push down. Okay, so that candle tapped me out. They gapped it down, and that's why you gotta be careful with 1 minute candles, okay? So that was just, I was feeling out the market there. It's bearish, clearly bearish. So you see how that 1 minute zone held, the hourly zone held up. A lot of sellers, guys. So that will be retested later. We could come up to this later on. Okay, so I'm gonna focus on the 5 minutes. I don't like trading this style of volume. I see when they gap down 1 minute candles that they're playing a lot of games down here. I'm gonna continue to wait it out now. Okay, so what I'm watching is right up here. Now I can see how strong this resistance is right here. Very, very strong. Strong on those 1 minutes. I can see how they're gapping 1 minute candles down. So they're moving the market down by gapping it down. They're manipulating it down. They're bypassing orders. Right where my stop loss was, they bypassed orders. On my broker, I have a gap down 1 minute candle. Doesn't really show it on this one, but they gapped it down. When they do that, I don't like to play games like that because that's not right what they did. The way how they gapped down, bypassed all those orders, you know, where those buyers were waiting, they gapped below them. They, you know, and they manipulated the move to get away from those orders and drop it down even further. When I pick up on clues like that, I know how the market is trading. And that's like a clue. You know, when you get you play a game and you get a clue, I don't want to participate in that. And then I know that they're trying to come down here and liquidate and get those orders. Okay, so what I do is I sit back now, I see what they're doing, allow them to possibly build it back up, and then I'll look for my closing candle above there. So you can speculate in the markets. It's a nice big bullish return. I know what they did. They came down there to hit all of those stop orders down there. That was myself included, right down there. I saw how they, I can show you a screenshot maybe on my I don't know if I can here. Fuck, that pisses me off when they do that. And then this is what happens. Comes right back to your position. So now I could go right in, be mad, and go back in. But then if you do that, then they'll push it right back down. Okay? So I don't want to play that game. I'm going to stay on the higher time frame now. I'm going to watch for volume to technically give me the closure above here. See, if I base my analysis stop loss right there, 50%, that's where they came right in. My stop loss was just below there. They gapped it down to trigger me, okay? I don't know how I can explain this to you guys. Let me show you guys. Let me see if I can do it this way. 1 second, guys. you guys still here? See this? Do you guys see that 1 minute candle right here? Okay, I had my stop just below here, right? And look at what they did. These are 1 minute candles. I know it doesn't show you on the chart I'm using, but here, see where it kind of closed right there. It came down, came up, closed right there. They gapped it all the way down. Look at the opening where it opened all the way down here. Do you guys see this? Okay, so they bypassed all of that, right? And then when it came down there, you know, they bypassed my stop order, triggered everything down here, and then when it came up like this, I got stopped out. That's why I hate trading with a hard stop in the markets, because of this shit. Had I just used a mental stop, I could have been part of that coming right back up. They would have bypassed my stop order. They came deeper to trigger all of these stops down here, but then when it came back up, I got stopped out, because that's the problem with using you have to use hard stop losses, but as you get more and more experience, you might avoid using hard stops. Okay, use mental stops, and then you see and then miss that move coming right back up. Okay, so things like that happen. I can't have control of that, right? That's the market manipulation. That's how they manipulate these markets. Okay, and then you see again, it came in there, they rejected it back down. So it's still trading inside here. I hate when gold starts like this. Just gives me, you know, a bad vibe of the volume when they start doing shit like this. And this is too, guys. You might have the right intention. You might have the right direction. Sometimes the market will stop you out and go in that direction. You don't need to get mad. You don't need to get upset. Just continue to trade with your bias, okay? Learn from what happened. Learn from exactly what happened. Maybe my stop was too tight. I agree. If I had it just a hair below, maybe I would have been... But that gap down still probably would have got me. You know, that's what they do. They gap down the markets, trigger all of those pending orders, liquidity in the market, scoop it up, and then go opposite direction. That's exactly what happened right here. Unity, will we be trading FOMC live on YouTube? Yes, if there's enough likes and subscriptions, subscribes, we will come for, if you guys want it, you guys, you know, like and hit the subscribe, and we'll be there with you guys, okay? We'll do it around noon, 12:30, and we'll go till 3 p.m. Okay, so again, this is building. It could be a bullish impulse breakout, but it could just impulsively break out, and then they wick it right back down. So we've got to wait for closing confirmation volume. Emmanuel, you're taking a buy. I'm not going in on an impulse. Not with the way how the market is trading right now. I'll wait for full closure. Okay. We got 2.5 more minutes to go. Let's see if this candle will officially close above this area here. And look at where these candles were produced, right at 50% of this big body candle right here. Okay, so we are impulsively breaking out on this 5-minute candle with 90 seconds to go into the close. So just going through the motions. If it does close above here, all I'm going to do is invert this red box to a green box. maybe possibly look for a pullback coming into here, maybe to buy out of here if I still have that bullish bias. But let's do it. We'll diagnose when it closes. Okay, that's a nice big bullish candle breaking out of there. How much is it filling to left? Remember this area right over here? Sorry, I moved that red line. But right there at that body, and there's no volume closing above those bodies. There's a lot of impulse moves coming out of there. So it came all the way. That was my intentions, was to trade up to that red line. But let's see if volume will close above it and maybe continue to move up, or get rejected and pull back down in. Okay, so 30 more seconds to go. So it tapped into that, again, impulse break of that red line, got rejected so far. Let's see where the closing volume will be and how it closes. Okay, so here's the close. 5 seconds. So I'm going to assume it's going to close about there. So I'm going red to green. Okay, but you see how quickly they brought it right back down and they closed it, opened it, bearish ignited off of that big rejection. So it's got its wick again and holding. Okay, so it is holding. Okay, I'm going to buy now with this retest. This will, I know it's, I'm pretty active in the market right now, but that candle bar closed, retested, so I'm going to look to see if it can fill that previous wick and fill the wicks behind me, maybe, you know, target that top of that red zone and that trend line, okay? But I also have to be very careful if it comes up here to acknowledge this area up here too, where it's a body, a body, a body. Again, impulse, 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 impulse. You know, it could come up to that red line and then come back down. So these are the targets, what I'm watching, okay? So I'm back in my buy. Again, if it gets up there about 20 pips and then can start to reduce some risk and maybe ultimately get it to the top for about 30, okay? But right there at that trend line, and that is a very significant red line there, okay? So we'll try this again. Samuel, you got that scalp? Nice one. As long as you were in and out of it. Okay, so you remember that white line down there? Can you guys see that white line? Remember that white line was that hourly resistance, now acting as support. Okay, so remember that white line is very significant down there, because if you remember our hourly candle, remember the hourly candle right here? So the hourly candle is going to close in 8 more minutes. Here was where I placed that white line. It was that wick. That's where that big bullish candle broke out at 5 a.m., came back down, closed at the white line. It opened bullish, came up lower high, big bearish candle. Now we got that volume again, right just a hair above that white line. So can this hourly candle get that volume to close above there? We'll watch it on the 5 minutes. But again, that's that point of interest that buyers are trying to get it above and sellers are protecting that white line there. So it's still holding as current resistance. Man, cannot break that white line or get some sort of support out of it. So now it's coming right back down. Again, guys, I have a pretty tight stop loss because I don't want to trade in this kind of this area where they play these games. So I'll probably get stopped out again and it could definitely continue to go back up. But I don't want this thing to really bleed out all the way down in here. So I'll verbally let you guys know. Again, my stop is just below here. Okay, it's got a little bit of a wick. It's building a little bit of support on that wick, but it's still a heavy bearish candle coming down. So this could move up at 8 a.m., right? The hourly momentum, but they could be coming down here to grab liquidity, grabbing the liquidity and then redistribute it at 8 a.m. Okay, they got me. I'm out. Oh, this is frustrating here. Okay, I'm not going to trade. I'm not taking any more until COMEX market opens. This is too much over here. Normally at this time, this is when I walk away. I go for a smoke and come back. Don't want to engage in this. Guys, I'm just going to, eliminate this green box. I'll watch that white line. I hate trading like this. I know it's an FOMC day. I hate trading this type of volume. There's no trend. It's just going up a little bit, coming back down, going up a little bit, coming right back down, go down a little bit, come back up a little bit. It's not even worth scalping this stuff. It's not even worth scalping. So what we got to do is, just look for bigger moves. Okay. So we got to find and be patient and just wait. That's what we got to do. Okay. So I can see right here, this red line is making the 5-minute neckline. There's where it came up, back down, came up, back down. I'm going to just, if these sellers are strong today, let's see what they'll do in this green box down in here. Let's see if the sellers can bring it down in here and see how things trade down in here. Okay. If the sellers are strong, right, then they should be able to bring it back down to the low of the day and break this low of the day. Okay. But if these buyers are here, they're going to continue to accumulate. Maybe it might need to come in here. But this entire range in here, from the red line to this green box, I will not be even entertaining any trades in here. This is horrible volume. I've already discovered that with 2 trades. And this is garbage. Okay. Like the other days where we have nice trending volume. Today it's just, it's stuck in here. Okay. Will they redistribute this at 8 a.m.? Possibly. Will they do it for COMEX? Who knows? Or it's just going to be one of these days where it's just frustrating trading in here. And I hate when it does stuff like this. So this is when I take a look at other securities. I look at what US30 is doing. I look at what NASDAQ is doing. We don't need to just trade gold. There's other things that we can look at as well. But even looking at NASDAQ and US30, I don't really see anything of significance either, but we will come down there very, very soon. Can we do S&P 500? It's too much, because then if I do S&P, I can't fit 3 charts, S&P, NASDAQ, and US30. We'll have a specific day where it's just like, S&P. Unless you want to sacrifice NASDAQ or US30, we can fit S&P in there. For me, I don't care. Patrick, I don't mind, but it's others. Okay, so let's wait for 8 a.m. It's 2 minutes away. We know where our hourly resistance is. It's not a secret. It's this white line. I was trying to buy above there with those buyers, okay, but you can see it's getting rejected. So selling pressure is still strong at this white line. 3668 still has a lot of selling pressure. I was trying to buy with those buyers on that hourly to see if they could close it above there and then 8 a.m. move it back up. Okay, I tried. I saw that the buyers weren't there. I got stopped out. I got taken out. No problem. It's not the end of the world. It's now we got to learn. There's heavy resistance. Sellers are still strong. Look at they're absorbing all of pretty much the base of the candle still left in here, closing in 1 minute. Next candle, 8 a.m. could be bearish and continue. That's why I said, let's see if their sellers are strong and they can take out today's lowest point of the day. like gold right now, it's just in this range. Let's say from I'm going to say from 3664 up to 3669 up here. So it's just moving up, coming back down, going up, coming down, going up. There's where, you know, we almost had a break, but then sellers stepped in and pushed it right back down. So again, both sides are accumulating here. Nothing really, we're just in a range. So it could continue to trade in here up and down, which it might do. And there could be a move. I was hoping it was going to happen. Close above here, retest this, then we're breaking out to there. Did not happen. So what's the other one? Sellers could bring it down in here and test that lowest point of the day. Okay. But while it's still in here, I don't even want to accumulate with anyone here. I don't care who's buying or who's selling in here. I don't want to be involved. I tested out. I got my feet wet. I don't want to take a dive in here. Okay. So I let all the buyers accumulate. I let these sellers accumulate, and I'll sit back and watch and see where the volume is redistributed. We'll stick with gold for 5 more minutes, and then we'll do like a NASDAQ or US30 chart. We'll do a top down, and then we'll come back to gold by 8:15. We'll get ready for COMEX. We'll see what's going on. News-wise, not much going on around 8:30 news. And then we'll get ourselves ready for Wall Street. It is the day of FOMC. Okay, so expect maybe some choppy volume, which we are seeing. Okay. See buyers bringing it right back up. So remember that hourly white line. It's this white line again. So it's coming right back up. I told you on both of those trades I had very, very tight stop losses. Okay, the one was on the 1 minute, the other one I based on the 5 minutes. So it's just in this range still. Again, there's traders that want to take an impulse and go up with it. You can, but again, the market could fake you out, right? Could just come in here again, impulse, and go right back down. So the reason why I took that 5 minute buy, because that candle did break out and close above, right? And then as soon as it came in, kind of retested, I went in that buy, but it didn't have enough volume to continue to fill the wick, to continue drive. It came all the way down. As soon as it kind of broke that support level, that's where my stop was. I got stopped out because this could have definitely turned bearish and come down here. It didn't. Came back up, and it's coming back up now. So it could continue to build out of here. And if you are in buys or you are buying, just keep a heads up on this zone above here. If it comes all the way in there, you know, to here, 3673, that is a hourly resistance in the market, just for you guys. Marl, yeah, that's correct. You can look at it that way. S&P is the baby NASDAQ, so the analysis on NASDAQ should correlate with S&P. Yeah, in your view, that I see that too. They're not the exact same, but they're very, very similar. NASDAQ and S&P are basically controlled with the same 7 securities. You know, the Magnificent 7, that's what basically controls those 2 securities. Your Microsoft, Amazon, Google, Apple, Nvidia, those big names, that's what controls all of S&P and all of NASDAQ. Basically, those seven companies right there. The Magnificent 7, they call them. Okay, we got 90 seconds to go into the close now. So we're going to get that blue volume again closing above here. Is it going to come up? They're going to reject it back down. I'm kind of hesitant to continue to buy with this, you know, like, oh man. This is where sometimes I want to go look at a different security and then come back and see later what the results were. I know if I do that, I'm going to miss out on a move, but I understand if I engage again, it could just bring this right back down and then just get further frustrated, right? You think gold is going to go bullish now? It's time. Let's see. Let's see. First of all, will it close with volume above that white line or not? And then if it closes like currently where it is or near the high, that white line will represent 50% of that candle. So if it needs to retest, that could be the support and the point of control of that candle. That would be a proper area if this volume can continue. So it closed, okay? So if you're looking for, you know, if we just base off of where's 50% of that candle, I'm sure it's right there. You know, so if you're drawing a zone off of that, it would be that white line still. And right there, that would be your 50% zone. So now it's coming back down. And then you could look for now it's retesting. So this is where you would look for a wick on a candle to get the wick here at 50% of that candle at that hourly white line now to build that from resistance into support and come back up, turn up and come back up. But the way how things are moving, this could just be another bearish candle coming back down in here and come down. So it got the wick, it flipped. Now it's a bullish hammer. That's technically, I love buying this candle, but I'm staying away because I've already taken a couple hits and I don't want to engage in this. I'm sorry, guys. But that's exactly the type of flip I look for. 99.9% of the time, I would be in a buy on this candle. I'm not confident right now, you know? Like, I'm not confident that the buyers are really here to, you know, make a significant impact. But if you're in, that's a proper retest of that zone. If you go back to your hourly candle, you see the hourly candle now is pushing up a new hourly candle. This is the new one, 8 a.m. will represent COMEX in a little bit. Could continue to fill these wicks and drive up to that red zone. If you're in buys, I would pay attention to that red zone up there. Okay, so you guys can continue watching this. I just want to do get like a NASDAQ out of the way really quick, and then we'll do US30 in a little bit. Okay, so I just want to do this really quickly. Top down on NASDAQ. Going to do a little faster here. So this zone that we've been talking about, previous all-time highs, double top highs, stretching it into the future. We closed above right over here with some blue volume, stretching it into the future. And then our pivot points that we've been talking about, look for your daily pivots. Okay, this move that came up, we pivoted, we stopped right there. There's a yellow point of interest. As it came down with those two daily bearish bars, we stopped right there. There's our daily pivot point coming back up. That was a previous all-time high. Where did volume close? Where do we have bodies? Located right there. We continue push down. There's where we have our bodies. I can find a demand zone right below here as well by using my pivot points and looking at those 4 wicks. 1, 2, 3, 4 wicks. That's when they came in that green zone. They went back up. We continue to push up. We've got a new all-time high yesterday that was hit. Okay, so the market's rallied right up there. There's our new NASDAQ all-time high. Just under 24,400, 23,392 to be exact. Can we kind of dissect a little bit, maybe off of this big bullish candle that still has not been transacted into yet? So can we kind of just determine where's 50% and a point of control off of this big day? This is Monday, so this is representing the start of our week. So it is also the kind of like a weekly analysis when you're looking at the Monday because it's the start of the week. There's 0.5. Okay, so yellow line. I can see we came very, very close to coming into exactly 50%. Yesterday we didn't. It hit the top of the zone right there. the bullish point of control. Sorry, today's wick, or today's low is right at that point right there, okay? So when we look at yesterday's candle, it opened bullish. It was very bullish, 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 bullish. This was a big blue candle, hit the highest point of the day, all-time high. Then they rejected it. We lost all of that blue volume, and we came back to the opening price, and it made a low and closed. It virtually closed exactly right where we opened. So a big point of interest is right here, where Monday we closed, Tuesday we closed, and this was our opening price today. We opened, we have a high, but it's a lower high from the all-time high. So there's our purple line. Got rejected, came back to the opening balance. Sellers pushed it down. We took out yesterday's low, so that is an important point of interest. Yesterday's low, took it out. We continued to push all the way down there. See, just the top of the green box, it didn't come trade at exactly 50% or the bottom. Right at the top, it got hit right there. That's our lowest point of the day, holding. So that bullish point of control is still holding, and it's pushing all of those sellers right back up. And this is where we're trading right now. So can we come back up to the opening balance? Maybe break to the highest day, and then we're traveling up to that all-time high wick. But one more thing that I do when I analyze all-time highs and just like a high in there, what if it doesn't come all the way up to the all-time high? What if it comes up, it impulsively breaks, but it's a lower high? So the only other way to determine is go 50%. Cut this zone, cut this orange line and this purple line in half, and determine where's 50%, okay? And then look at the number, 3,350 on the dot. So not only do I have the psychological midpoint from today's high and the all-time high, but I also have a psychological number there too. To confirmation, go with your Fibonacci tool from the purple to the orange line, and then you can see exactly where's the 0.5 is right there, okay? Because if it does flip, and maybe we come back up bullish today, if the volume flips back up to the highest and then breaks out, could be an impulse right up to there, and then the sellers reject it back down, and they're protecting the all-time high, okay? If it wants to continue to break out of there, then yes, we'll test the all-time high and maybe continue going up to 24,500 would be your next big target up there, okay? But right now, we've got some consolidating going on the daily, breaking it down to the 4-hour. Okay, so now I can see the 4-hour candles. We had a big bullish one Monday, start of our session, that 6 a.m. to 10 a.m. candle. We continued to push up all day Monday. We hit our all-time high prior to London market. And then here's London pushing down. All the way down, we came back up. Can we represent 50% of this? I can see it's lower high, lower high, lower high, lower high. So it's holding, and we got pushed down. So here's Europe candle, 4-hour, 2 to 6 a.m. We opened, was bullish, 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 hit the highest point of the day, came all the way back down. We hit the lowest point of the day, came back up, and it closed as a spin top. You know, indecision on NASDAQ coming out of Europe. Right now, we've opened, we came up, higher low, lower high, higher low, coming right back up. So again, it could flip back up bullish and turn back up and fill some wicks, but we have a big bearish candle that engulfed 1, 2, 3 bullish bars behind us, and it came up lower high, came up lower high, came up lower high, came up lower high, and pushing down with new lower lows. So NASDAQ could maybe continue to trade bearish. I would be looking for maybe some hourly closing volume below this yellow line to confirm, and then maybe drop down further, okay? On the 1 hour on NASDAQ, we can see the big significant drop right there. We found the bottom, we came back up, but you see no hourly volume is closing above this purple line. So it is continuing to push down. We had this big hourly candle at 4 a.m. was very bearish. That's what created our lowest point of the day, and it came right back up, closed. Next bar off of that momentum was bullish, got rejected. So you see that yellow line is now reflecting about 50% of that big 4 a.m. bearish bar, and we still have the volume below. Now we're building a little bit at this daily line. NASDAQ came down, came back up, closed above. We could be pushing up again. So is it going to find a little hourly support at this white line and come and trade back to that yellow line? Will it come back down? But what I would be watching too on the hourly is maybe where is there a good hourly point of interest? I would go, let me see here. I want to go right here, but maybe I want to bring it down to represent 50% of this bullish candle. If I do it like right there, that's my hourly resistance. I'd like to see if NASDAQ can close kind of above 24,265. It's representing 50% of this candle, and I can see when it came in, kind of wicked off there, came in, wicked off, broke down, volume stayed above, again on that white line, back up. Here was that substantial big drop. Look at where it closed, right at that white line. Again, this was a bullish candle that came down. Look where it closed, right at that white line. Opened here, volume below. There was an impulse. So right here, this is where there could be a lot of action towards this white line. Are we going to close above here with some hourly volume, retest this to take us back up through here? Or is this going to continue to be our resistance at this white line, and then it's going to continue to come back down? So I'd like to see if NASDAQ buyers can prove to me that they can close it above here with some confirmation in order to continue to move up, or sellers are going to be here, continue dropping this thing down. So on the 5 minutes, there's that white line right there. You can see like a little bit of a trend on the 5 minutes from highest point of the day. Right there was kind of like a double top at that purple line. So just coming down, coming down. Okay, see from that point, connecting it from point A to point B, staying consistent with it. I can see where it kind of just fake broke out there at that white line, bullish, bearish, bullish, bearish. Then they brought it right back down. Again, we kind of closed above that trend line. So we are in this consolidated phase right here, where it's just right there. So, you know, like there's that white line. So what I was saying is, can the buyers prove to us maybe getting it above here, closing above, retesting this to take us up there, and maybe take us to the highest point of the day? If sellers are here, they will continue to push this thing down, and then we're selling back down. We could get right back below this trend line and continue pushing back down to the lowest point of the day. Okay, so that's what I would be watching for on NASDAQ. Daily bar indicator. We have our opening price, made the highest point of the day, came all the way down to the lowest point of the day, and we're trading right in here. EMAs 9 and 200 are on there. Okay, so let's go back to gold. Let's watch this thing. We're a couple minutes away, 3 minutes, 4 minutes away from COMEX. So it got that retest, you know, that candle I was just talking about, traded right up to our trend line. We're just right below that red zone, coming right back down. So get ready, guys. We're going to get a little bit of volatility coming in the next 3 minutes. It's going to be the COMEX market open. It's the commodities exchange, specifically for gold and silver. And we'll see how things are moving, okay? There's no news, not much, no high impact news. There is news at 8:30. Low impact US news, building permits, housing starts, but no high impact red folders. Like yesterday, we had the US retail sales, so we don't have anything today. High impact. I need another coffee. Okay, what are you guys' bias on gold? Do you guys think with COMEX volume entering the market, do you guys think we can maybe break this trend line, start to, you know, get into this red zone, long Omar? Okay, so you're in a buy. Is anyone short on gold or short bias? Think we're going to come back, push down? It is building right now. We got that volume above that hourly support. You know, my bias was buy direction, but I just had those tight stops. But now it is maybe going to open up, and you know, SSDN, you're in a small buy. A lot of you guys, Mohammed long. Bidoy, all day is bearish. Shouldn't it be bearish? No, there's no guarantee. Just because a daily candle is showing bearish doesn't mean it has to be all day bearish. Candles flip, just like 5 minute candles flip, just like hourly candles. I've seen a bearish hourly candle like right here. This bearish hourly candle is very bearish. Look at the next hour, how it flipped back up bullish. You know, this was, markets can change sentiment, okay? So on the daily can change sentiment. So just because it's showing bearish volume right now, doesn't mean all day it's going to be bearish and continue. You know, things can change with news. Things can change. If Trump announces something, market sentiment can switch. So don't always think, guys, just because something is bearish, it always has to be bearish. Or if something is bullish, it's always got to be bullish. I used to think like that too, and it kind of threw me off. But it also depends on your time frame when you're trading. I'm more of a short-term scalper, intraday trader, so my bias changes very, very fast. Like sometimes when I'm in a buy, if I see bullish candles, I go in a buy. Next candle could come right back tumbling down. So my bias switches very, very fast as a scalper. But yes, if you are more of a swing trader, you shouldn't even be, or a long trader, you shouldn't even be looking at these lower time frames. Don't even waste your time with these. You should be watching daily bars, not just one, not just today's, but consecutive bars. How has it been trading all last week, 2 weeks, 1 month from now? Okay, so here we go, guys. This is COMEX now, 820. So we got volume that did technically close back above that trend line. Okay, so if it pulls back right there, you got a body, and 50% will be right there, right? It's not that difficult to determine where's 50%. I've got a body close, body open, and that's 50%. So even if it comes back to retest 3670, it could come all the way back down there, catch a higher low, and continue going back up. But now the buyers are trading into an hourly resistance area right here. Okay, we have this red zone for a specific reason we got from our hourly. How can I tell? Because I have my white line right in the middle there. Okay, so it could come in there and go back down. It could be bullish and cut right through here, retest this, and then it's driving even higher to that daily yellow line. Okay, so now it's coming back for the retest of the previous candle. Okay, so there's the retest. There's the wick right there at the body, 50% of that candle. We got a good wick, good rejection. Buyers are there supporting this move. So the volume came right back to the opening balance of COMEX. And let's see if we can continue to push up our wick and maybe continue to break out to that the white line up in here, okay? So if you guys are in buys, that's a great retest. Okay, it's still holding. Got the volume, got the buyers asking to trade above here. But let's just keep an eye on what happens when it trades into the red zone. You could, with the COMEX volume, it could definitely break through here, okay? Now you're getting an injection of more volume entering the markets. And then you can see maybe we're going to flag, okay? So the flag is located right under the red zone where the sellers are and just right above 50%. So this could be a flag. It could continue to accumulate, and it could be a bull flag breaking out of this resistance, or it could continue flag and come right back down, okay? So right now, buyers are still asking near the highest price. That's great for buyers, but let's see if it can trade inside here now. Okay, so half the candle is exhausted. We have 2 more minutes to go. So it looks strong still. It built a higher high, had that higher low retest at 50% perfectly. So let's see if it just can continue doing its job, driving through here. Oh, wow. I didn't know that. T, are you still in the gold after holding through that drawdown? If you are, yeah, congrats. You know, you held through that. So hopefully this can break through and reward you. I had very tight stops. I admit it. Like I was buying at that white line, right? First one was on the 1 minute, second one was on the 5 minutes. Had I placed my stop loss a little in this green zone, yeah, I woulda, shoulda, coulda still been alive. Absolutely. So if that's the case, guys, you know, if you're trading with a tight stop loss, you're looking for a quick move. That's what I was looking for. I was just looking for a quick move, you know, move up 10, 15, 20 pips and get out, right? Just a quick scalp. That's why I went with a tight stop loss. If I was going to hold this thing, I would have gave it maybe more breathing room. I would have reduced my sizing, give it the room it needs to breathe. And, you know, that's how you can switch up trading right away, guys. If you're getting stopped out a lot, you got to figure out why you're getting stopped out. Is your stop losses are too tight, or you're just not reading the market correctly? There's got to be an answer to that, right? And if you're trading with too tight stop losses, again, it comes down to the review. If I see every single day I'm getting stopped out, and I'm getting stopped out because my stop loss is too tight, but I still have the correct direction, then it's a stop loss issue. It's not your bias. It's not, you're still trading correctly. If you start to learn your stops and they're going to profit, then just adjust your stop loss. Give it some more room to breathe, and that's it. You can turn into a profitable trader just like that and hold trades longer, but reduce your sizing. You can't just open up your stop loss with the same size, then you're increasing your risk on the trade. If you want to keep the same risk, you can increase stop loss and decrease your sizing. But these are things that you have to go over in your journal and figure out, right? Because when someone says, I took a loss, okay, that could mean various things. It could be anything. Why did you take a loss? Like, are you trading against the trend, number one? That could be why you take a loss. Is it because you over leveraged? Is that why you took a loss? Is it because you took an impulse? Like me, I took an impulse trade. Is that why I took a loss? It could be various things. But if I see that you tell me you're taking a loss and it's your stop loss, then I'll say, okay, we're getting stopped out, but let's figure out why. Let's see. Tell me your last 3 stops and let's review those trades. Then we might see that you had the correct direction, but you just got stopped out. So then we'll see, did you have a tight stop loss? Could we have opened it up and put it underneath some structure? And then maybe we'll see that all 3 of those trades could have gone directly into profit with a little bit of drawdown, but eventually get to profit. And then on a day like that, you would have 3 W's instead of 3 L's. So just figuring those things out. Remember, fine tuning. When your car has a problem, you take it to the mechanic, it gets diagnosed, and you can correct the issue. Same with trading. If we have some issues, we can diagnose it and we can fix it. My issue here, I'm diagnosing mine. The first one was a 1 minute scalp. I told you guys, on those 1 minutes, I was very, very tight. I can't even remember what time it was. I think it was over in here at 7:30. Yeah, and then I showed you guys how they bypassed me right over here. Yeah, this is where I was in. I bought these 1 minute candles up here, but then right there, that's where they bypassed me. Okay, I had my stop down there, bypassed, it came deeper, picked up more liquidity, and then as that candle was coming up, I got stopped out of there and missed that move coming up. So it happens, guys. It happens. But then you got to look. Is it your control? Did you have control of that? Sometimes when the candles gap down, gap up, you don't have control about that. Okay. So you see, we're still consolidating here. Came down, a wick coming back up. Came down, a wick coming back up. This is an ignited bearish candle. Continue to push down. We're going into 8:30 now in the next 2 minutes. So we have a 30-minute candle. Again, we can observe our 30-minute candle. So we got a strong bullish candle. It's filled that wick, filled that wick. Having a little difficulty with these wicks above here, but we're on our way to maybe test this red zone. There was that hourly resistance. You know, we flipped it now. Now it could be acting as support. If you look at your hourly candle, this thing still has 31 minutes to go. But you see how now, if all of this hourly volume closes above this white line, it's making this white line now, which was resistance there, resistance there, resistance there, resistance there. It could be now support going forward at this level where we were looking for the buys during this call. Okay, just the tight stops got us. Maybe for like YouTube and like this type of live trading, maybe I can open up my stop losses a little more, give it more room to breathe, help with the education, talk about what it's like to be in drawdown, talk about what it's like to be in profit, like how we normally do. Normally I trade with tight stops on these sessions. That's to prevent others from over leveraging and doing silly things. But if we're all on the same page, I can open up my stops, but I will personally decrease my sizing as well to allow for trades to develop, so that we're not just in a trade and then quickly get stopped out, and then we miss out on a move. So I'll figure my things out how to do this on YouTube. Okay, I'm struggling with things like that. Samuel, good question. For beginners, you recommend just sticking to one security to trade or constantly looking for new securities to trade? The first, stick with one security. Figure out one security and master it, okay? Learn everything about it. If you're trading gold, for example, if this is your security of choice, you got to know what COMEX is. You got to learn how it trades at 820 right now. You got to learn how gold trades during news, how it's affected by US dollar movements. Learn how gold can be very erratic. It can be tough at times. Learn its behavior. Then you'll figure out whether you'll like gold or not, and then you can maybe introduce a second security and learn that one, okay? The more you spend time with a security, the more you'll learn about it. You'll learn how its behavior moves in Tokyo, how it moves in London, how it moves in New York, how it moves relative to news. You'll learn maybe contract sizing, and you'll learn where to place stop losses and everything, but you learn a lot about it, okay? And then once you get comfortable with it, that might be your security of choice. If you want, then you can introduce a second one, get familiar with that one. I wouldn't be flip-flopping from gold, going to GBP USD, going to NASDAQ, going back to S&P, going back to crude oil, going back to, it's just, you're going to confuse yourself. It's a lot to look at. And I don't see a lot of successful traders flip-flopping from security to security. Maybe you got a few on your watch list, but the ones that you actively trade, keep it minimum, right? Quality over quantity. I always preach that. Quality, I only have 3 basic securities that I trade on a daily basis if I'm trading Forex. Gold and US30. Two, I can say. 2 securities. When I'm trading Forex, it's gold and US30. I'm not looking at anything else. I don't need to, right? I can make money every single day just by trading those 2 securities. I'm very familiar with how Dow Jones trades. Gold, I'm familiar with it, but it can be finicky. Like it can be frustrating, believe me. Those 2 trades I took were frustrating, right? That's what kind of kept me from buying a third time, because if I got stopped out a third time, then it would really affect psychology trading. And then once you figure out what's working, don't break it. Everyone asks me all the time, Ron, why don't you switch up US30? Why don't you trade something different? And I always say to them, why? What's the point? If something is working for you, why break it? When you got something good going on, just continue learning more about it and just learn consistency. That's it. Why introduce other things, right? If you're going to trade New York every single day, New York is your session, then pick a good security for New York. Again, you guys are all around the world. Maybe your session to trade is just Tokyo, Asian session. Then you got to find a specific security that trades during Tokyo. You could trade, if you like currency, pick a Japanese pair, a yen pair, like USD JPY. Learn how gold trades. If you're trading London, do you want to be trading NASDAQ in London? That doesn't really correlate. NASDAQ, it does move, but it moves better in New York, right? With New York American news. If you're trading in London and you want to trade an index, maybe look at the FTSE, FTSE. That's the London. It's basically like the NASDAQ of London. It's the US30 of London. It's the UK stock market. Trade DAX. A lot of our traders trade DAX, the German 30, German 40. You're trading the German stock market during European time. Get to know how that security moves, right? You want to trade relative, having the proper security for the proper session and getting to know how it moves. Get familiar with it. Get to know its behavior. It's just like getting to know your kids, right? You spend every single day with your kids, you know your kids' behavior, right? I know my daughter's behavior, I know my son's behavior. Same thing with trading. You want to get to know your security, learn how it behaves, learn how it moves. Okay, so you see the buyers having a difficult time getting it into this red zone. So it's still holding. Every time it comes in there, sellers are there pushing it down. So, if this body, sellers push it down, we're back below that trend line. It could come down bearish and trade back down to our hourly support, okay? So right now it's still in this bull flag. It could flag in here for another 10, 20, 30 minutes, okay? But it looks like it's still building. It hasn't broke out of here yet. NASDAQ has made a little bit of a move. Okay, you can see it's on light volume. It did close above there, did push up right up to there. That purple line is that 200 EMA. But even if I didn't have the 200 EMA on my chart, I'd be looking at maybe that body right there, that point of interest. As it did come up there, it got rejected, but now it's building its way back up. So it's a rather large wick to continue to build up. It's got to go blue, 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 fill up, and then maybe it can break out. So as it's filling up, it might get a lower high, and then they push this thing right back down, okay? So NASDAQ is moving a little bit to the upside. Where do we have big 5-minute resistance? It's located right here. Look at the yellow line. There were the 5-minute wick, 4 wicks. Red box, stretch it into the future. Again, came up, push back down. There's 3 wicks. Wick, push back down. So just heads up for NASDAQ traders and buys. If it comes up there, remember you're coming up to this red zone and that daily point of interest where we open basically, that opening price. So yes, it could come all the way back down there and push it right back down. It could come up like this, how it's coming up. There's the neckline down there, coming up a second time. That could be like a double top, and then they drop it back down. Boring market right now. Traditionally, the day of and the day before they release the FOMC news, markets are pretty choppy. You know, we're not getting the greatest of volume. Like we started really good on Monday, and Tuesday was great volume to be trading on all securities, on gold, on NASDAQ and US30. Markets were really trending nicely. Not too much of this kind of whipsaw action, really nice movements in the markets. Remember, nice clean patterns. That's when I always say, guys, if there's good volume, you will recognize good volume, maybe continue to take advantage of that, because the next day could be one of these tough, choppy days. And then these are those frustrating days. But these are those days you got to also learn how to control yourself. You got to also learn restrain yourself, to learn what is good trading volume, what is tough trading volume. When you figure out it's tough volume to trade, it's got no direction, it's frustrating, that's when you got to be mature and learn how to maybe step away from the markets or not take so many trades that day, because those are those days that destroy us. Those are those days that kill us. Those are the days that take all of our profits away. And then we start to trade on impulse. We start to get restless. Like, you've been waiting in this consolidated zone for about 30 minutes, 1 hour, and then finally when we see one candle, we get excited, we take it, and it's an impulse, and then the market punishes us, and then we just get mad again because how much time we've invested watching this volume consolidate, and when we do wait for confirmation, we get stopped out. Then the market, it's one of those days where I always say, guys, don't be afraid to walk away. The market is open the next day. It will be open the day after. It'll be open next week. It's going to be open in October. It's going to be open in November. It'll be open next year. You don't gotta engage in this. Like, I'm being respectful to you guys, to everybody here. If this is how I got up this morning and I wasn't trading with you guys and I saw it, I would go, right back to sleep. I wouldn't be trading this. I would be maybe coming back more for Wall Street, post Wall Street, getting ready for the FOMC. I wouldn't be sitting here just watching this stuff. But now we're starting to get some movements now, okay? So we've came out of COMEX now, 820, it's 840. We're getting closer now to a 9 a.m. candle. We're getting closer to Wall Street. Gold is making a nice move, okay? So we traded exactly right at that white line. That's that hourly 50% of this zone. That's a fantastic candle. If you guys are in your longs, congratulations. I unfortunately got taken out, but bias was long. It just took a while to develop. We had to get that volume closing above that white line right there. We finally got it. And look at now how we've retested it. And we're continuing to make higher highs. There is lows, but they're higher lows. And it continued to break out of there. So notice how it closed right above that white line. The white line could turn into support real quickly and continue to drive back up. Okay. If you're looking at 50% of that blue candle, hopefully you guys are doing this. You could cut it yourself like that. You could physically get your tool and measure it from opening to closing balance, and you can literally put it right on 50% exactly, which is right there. You can even find your point of control zone of that candle, which is right there. So now it's coming into the point of control. We moved away from that consolidated zone. It's got a wick. Will it wick and continue to push all of this bullish volume? Notice those tweezer top highs. So those are equal highs there at 3674. So when you have those equal highs, they're potentially holding the market down, coming down. But now if it can pick up those buyers and flip this, you turn into a hammer candle, and then you could continue to drive right through this red zone and get up to that top target of 3675 up there. Okay, beautiful. See, came down there right into that bullish point of control, just above 50% of that candle. And now we flipped it into a bullish pin bar that now all it has to do is just continue to trade at the highest point. That would turn the candle into a hammer, and it could break those equal highs and continue with a new higher high. And maybe there's the hammer. Okay, so we got the new higher high break. Now we just got to continue to fill, come right back up to the top of that red line, and there you go. Okay. Oh man, I wish I was still in this with you guys, but you got your profit out, Mohammed. Good, congratulations, bro. As long as someone is profiting, I lived through you guys, so I hope someone got Sean, you got 30 pips, closed out 80%. Congrats, bro. Pedro, do I use Fibbo for a bounce or just candle? Just measuring candles. Just basically where my 50% is and where my zone is. That's basically why I use the Fibonacci tool. There's other specific reasons why traders use it, to look for retracements at those levels, 618 and things like that, to find the golden zone. I do it specifically for points of control and 50%. Mohammed, you learned from me. Thank you, bro. It means a lot. Hopefully you learned good things, not the bad things. Don't learn the bad things from me. Learn only the good things. Okay, so now we're not done, right? I'm not in the trade, but I'll still analyze it with you guys. I would love to have still been in this buy, believe me. But next thing, what we got to do is watch where the volume closes, okay? So you see we're at the top of the red zone, because I always say if we close above the red zone, we can flip this entire zone green. So if it pulls back, then we're making a bigger depth of market. Also recognize that your 200 EMA is just right above us, okay? So sometimes when it comes up, it kind of grabs that 200 EMA and maybe grabs a wick and goes back down, okay? Our next technical daily point of interest is right up here. This yellow line at 3677. Justin, you should have held. I know. It haunts us. Those woulda, shoulda, couldas always haunt us, you know? I look back, okay? So let's just kind of, you know, dissect me for a second. The buys that I was in, bias was correct, okay? So check mark for the right bias. It's not like I had the wrong bias. I was looking for longs, okay? The only thing was, now I look at my stop loss placement. The first trade I took was on the 1 minutes. I just placed it below like the 1 minute structure. That was, I told you guys when I was going in, it was a really tight 1 minute stop loss, just looking for a 1 minute flip just for a scalp for about 10-15 pips. That was on trade 1. Trade number 2 was more on this candle where we got confirmed 5 minute volume that closed. It was this one. As it came down, it retested, and when it went back up, that's when I got in. But then that big bear candle, and I had my stop just below right there. Those bodies like right there on the 5 minutes. So that's when I got stopped out down there. Again, looking at where I could have placed my stop loss, just if I was right just below in that green zone, I know it would have came very, very close right there. But remember yesterday on those 3 successful trades, I gave it more room to breathe and I had my stop loss in these zones. So that, again, I didn't follow that system today. I went tighter and I got stopped out, and that's the results, okay? So let's learn from this all. I'm learning too about where to place stop losses. Maybe I should have trusted my zones, gave it more room to breathe. How much more would I had risk? Okay, I would have put an additional 25 pips of risk. So if I did that, I could have just decreased my size just a little bit to make up for that 25 pips of additional drawdown. Do you guys understand that? Okay, I need you guys to understand this, please. I understand it when I'm trading. Like honestly, guys, I'm telling you the truth. I understand how to do this when I'm trading. Myself. I just kind of go a little tighter for you guys on YouTube because I know some of you guys are trading with not proper risk management. So I'm trying to trade with tight stops and hope not for drawdown, okay? But situations like this, it happens. But I need to know if you guys understand this. Had I placed my stop in the bigger green box, right? It's a bigger green box for a reason. I could have, now looking back at it, reviewing it, it shows that I could have been safe in there. And then I'm just measuring the additional, it's not like I'm adding an additional 200 pips of a stop loss. It's 25 pips right there, 25, okay? So I could have added an additional 25 pips, which is not bad when you're trading gold. It's not big of a stop loss from where entry was. So entry was, again, the white line. So my total stop loss would have been 40 pips, 40, okay? But then if you did that, right, the reward now you're getting, if you're still holding, is now 80 pips. So you risk 40 to make 80, you're getting a 1 to 2. If I bet $1 to make $2 every day, I'm still growing my account, but you just might grow it slower than others that are using a smaller lot size, okay? So guys, we trade with you, but we want to help educate as well. Learn from my mistakes, okay? So that was my mistake today. I admit it. I'm human. I make mistakes, right? But what I do is I learn from my mistakes and I don't quit trading, okay? So that's what I want you guys. I read someone early in the chat said today might be my last day. I'm going to quit trading. Again, you got to go back and just take time off of the markets. Don't quit. Don't quit as of yet unless you're ready to make that conclusion. But I would go back and review. I would go back and review. All of us probably at some point maybe wanted to quit trading as well. But if we quit, you know, we wouldn't be where we are right now. So you know, I don't believe in quitting in anything. I don't believe in quitting. There's always a way, but you got to take your time to figure it out. Okay. So we didn't close. We have not closed with volume above this red zone yet. We are breaking out impulsively, which is fantastic for you guys in longs. Not so good for you guys that are selling the market right now. Okay. But if it reaches that yellow line, like if I was in this trade, I would be saying, guys, you should be taking your stop loss. You should be going to break even. Maybe you should be scaling a little bit out right now. That's up to you. I'm not in this trade, so I can't say anything. But the reason why I can't change this zone to green as of yet is because I don't have a confirmed candle. Maybe this one in the next 55 seconds will close above, and then we can convert this big red zone. We know that this is an hourly resistance. It can turn into hourly support. So if the market pulls back into here and we make this green, buyers could be accumulating to take it back up to that yellow line and maybe break it out even further. Okay, so this is going to close in 15 more seconds. Okay, so I'm going to assume it's going to close. There's the close. So I'm just going through the motions, red to green. I would be doing this if I was in a trade. I would be doing this if I'm not in a trade. I would be doing this regardless, okay? Because what it's doing is it could be helping me to get into a potential trade into the future. So you can see that it is now, we've closed above with nice bullish volume from the lowest point of the day, okay? So you can see how it was building. We struggled to get above that hourly resistance. It came back down, and then we got that closing price again, nice retest, and then it continued to go. Now, your next point is that yellow line. Again, can you locate 50% of that bullish candle? Same thing. That's a large size bullish candle. Again, how can you do this? Do you see how I just brought my cut line right to looking where cutting it in half is? Again, you don't need to guess. You can grab the Fibonacci tool, opening balance of that candle, closing balance. Okay, so me guessing where 50% was exact. I can find now the point of control of that bullish candle is right there. So you see where the wick was just developed? Right inside that point of control of that candle. If it continues to hold, there's your higher low, and then all we got to do is continue to come back up, flip that candle. Notice how it opened ignited bearish, so they dropped it down. If we just come back to the opening price, we could flip the candle. It could turn into a bullish pin bar, and then we're driving up again. We're filling that wick in order to test that daily yellow line, okay? But this could now be a bearish ignited candle that breaks this point of control of this candle, then comes deeper, deeper, deeper into the bigger depth of market. But right now it's still holding. Buyers are still active. Look at that perfect wick right there, okay? So for like 1 minute scalpers, if you guys are looking for 10 to 15 pips, that's what you guys need to be looking for. See right there, when you identify the zone, when it comes down, that could be like a 1 minute body coming out of there. I know you have to have very, very good spreads. I'm a 1 minute scalper as well, but some of you guys may be trading the futures with no spreads. That's what you got to look for if you're a 1 minute buyer. But when you take that out of there, you're not looking for 50 pips, you're not looking for 100. You're looking for 10, 15, 20 maximum, like 2 bar candles. If it's got the average true volume of like 10 pips a candle, like that candle was 10 pips, right? If it gets one more, you're 20 pips, and it would be exactly right up to that yellow line would be 20 pips. Okay, that's more for 1 minute scalpers. If you're a beginner, I wouldn't recommend on the 1 minutes. Stick with your higher time frames. 5 minute is a higher time frame than a 1 minute. Maybe move to your 15 minutes, maybe move to 30 minutes, 1 hour, okay? Depending on how active you want to be. Okay, so do you guys understand that retest right there? And then now for you fair value traders, the wick and the wick. See how there's this tiny, tiny, tiny imbalance in that body of that candle that was not transacted. That's your fair value zone, but I do it a different way. I do it with the Fibonacci. But there it is. Now you just came right back. Look at the proper retest. Okay, I know I'm not in this, and someone says, well, Ron, you're not in this, it doesn't matter. No, it does matter, because I'm showing you guys, I'm educating you guys on how to do this. And you see, if you're still holding, you could have a trailing stop loss. Now it came back up. Do you remember that was a bearish ignited candle that came down? What I always talk about, they flipped the opening balance, they backfilled the wick, and now they broke that daily yellow line. So this is very strong. Look at the candle. Remember, this was a big bearish candle all the way down here. And look how it's kind of flipped. Look at this move right here has created this big wick on the daily candle. So that's, guys, I hope you guys are learning the importance of the point of control of candles, okay? And then now also another learning point is we're going into 9 a.m. in the next 5 minutes. Okay, this has been a beautiful bullish move, but then 9 a.m. could come in, change momentum, change sentiment, and then we might see a bearish leg coming back down. Right now it's really bullish, but if a bearish leg comes down, maybe we'll probably break this one maybe, but then come down to the deeper one. Again, the hourly white line, maybe it retraces back in there, but now buyers are populating in here to get filled and then take it back up, right? If it loses this, we could sell all the way back down here. If volume can close above this daily point of interest, new hourly, maybe we build off of this and it's still got more room to drive, okay? Man, I wish I was in this with you guys. My fault, guys, for having such a silly tight stop loss. I should have opened it up a little more. Man, okay. I'm learning on YouTube myself. I'm learning. I'll get better. I get better on the daily on YouTube. Look at me as like a weekly, a monthly candle, okay? I learn, I get better on YouTube. As long as I know that YouTube is trading with proper risk management, that makes my life so much easier here. I'm always thinking about you guys and it affects the way how I trade. I'm telling you guys the honest God truth. You can ask any other streamer that does stream. Ask them. If they care about you guys, they're trying to use tighter stops so you guys don't do anything silly. That's me. I'm speaking for myself. I don't know if I'm speaking about any other streamers on here. Maybe some of you guys do stream live trading. I don't know, but I'm talking personally for myself. I feel like I'm accountable for you guys, and I don't want you guys doing any silly things. I know it sounds stupid because it's on YouTube, and I don't even know you guys. And I always state that we're not financial advisors. We're here for entertainment and education. But I have a good soul, and I'm always thinking about you guys, okay? And it does affect the way how I trade on these live sessions. But you know, normally if I just opened up a little bit of a stop, like you can see when we send out signals, right? Signals are 75 to 100 pip of stop loss, okay? Like if this sell here, if you look at the stop loss, if I can do my math correctly, from 70 up to 43 is about a 70 pip stop loss, right? 70, okay? Sometimes when I'm trading on these calls, I might be at a 20 pip stop loss. If we look at like commodities over here, trading gold, you know, along on gold, when we see the signals coming out here, okay, you can see when we get a signal, long gold, stop loss approximately 100 points to make 200 points, okay? So, you know, if we're okay with the signals, you know, I just come on and when we do these live sessions, I go obviously a lot tighter, but if I was to take that trade at that yellow line and put my 75 or 100 pip stop loss, easy money, right? So it's just know how much you're willing to risk. That's it. If you go tighter, then you're looking for a quick move right out of the gate. You're looking for like a bullish ignited candle to go directly right into profit, and you should be knowing what you're doing, okay? But if you don't know how to trade like that, give it room to breathe. Don't be scared to give it some room to breathe. Just decrease your sizing, okay? Guys, it is almost 9 o'clock. We did close above with a little bit of volume. Gold is moving, you know. It could retrace back down, but these are now bullish points of control. You can tidy up your charts now. Just keep the more important lines, the higher time frame lines, like the white line, your zone in here. This was just representing that 5-minute candle right there. So again, just please guys, if you're in this, just continue managing your money, okay? I'm gonna do now, we're gonna do get ready for Wall Street. It's 9 a.m. We did NASDAQ, okay? So we have NASDAQ charted. We'll get ready for NASDAQ during Wall Street. We'll do US30. I can see right now like how NASDAQ is trading. It is trading in a zone. Okay, even 5-minute good support is holding right here. So I got 5-minute support just right below this daily point of interest. You've got resistance, 5-minute resistance at this daily point of interest. So it is building nicely. Okay, let's do US30 and add this to our charts, and then maybe we can take a quick little break and get ready for Wall Street. Okay, guys, today is a long day. We do have our session that will end in another hour, and then Dave has a little bit of a post New York. I don't know, maybe he might take a break. I told him, like, you know, if you want, take a break. We'll come in around noon, 12:30, and then we'll do the FOMC session, and then another little break, and then 7 p.m. we have our education session, okay? So today is a busy day. We got to pace ourselves. Let's do US30 now, okay? So US30 was good to us yesterday. We'll see if it can be good to us today. But today's a different day. It's FOMC, okay? So it's not just a traditional trading day. Today there's a lot of high impact news regarding the interest rates, regarding Powell, and more so the forward guidance. Okay, so right over here, guys, I'm just doing what I normally do. There was a previous all-time high, December 2024. There was a next time. If you kind of figured that zone out and you stretch it into the future, then you would have been ready when it came back in to decide what type of trading you're going to do. Are you going to be buying or selling? Here, if you had sell side, you made some money. Continue with this into the future. Again, when the volume came back in there, determine what to do. It did sell off a little bit. Again, in here it came in, sold off a little bit. Didn't really break down. It's making higher low, so it's still pushing back up. And then there we got our bullish candle that closed with the closing volume. When we get a closing bar, like I see an impulse, there was a closing bar. That was Jackson Hole Symposium Day 2. That was when Powell announced right then and there. He hinted that coming in the future, which is today, a rate cut, right? And look at how the market rallied from then when he said that. Markets were trading at all-time highs. Now, the market has already factored in maybe that quarter base point cut, and that's why I'm saying it could be a buy the rumor, sell the news event. Market could sell back down into here when he officially announces it and listening to his guidance, okay? But it could just be pulling back, right? You know when we're saying buy the rumor, sell the news? What happens if it's already selling just a little bit, and then today, you know, it pumps? It very well could do that, you know, and continue just driving, okay? But we got to take it candle by candle, right? We got to take it daily, 4 hour, hourly, and then right into the 5 minutes, okay? So this zone, again, I can see how it came back right into 50% right there, and a little higher low right in there, early September, and that's what took us to the all-time high. So the same zone, stretch it in the future, get in the habit of doing this. Put a marker, a line, at 50% of it. And just, if you have the ability to put an alert to give you a heads up if it gets down there, do it. I suggest it's great practice, okay? You don't have to sit and watch all day at your computer. Can wait for the volume to literally come in here. You will get an alert, whether it's an email, a text message, a mobile. If you're at your computer, it will make a noise here. Whatever it is, you'll get an alert to tell you that maybe you should be looking for either a buy in here or you should be selling this location, okay? But I would stick with green zone, look for buys. Okay, and then what else do we got going on? This was a critical point of interest. Bodies, impulse. See how it was resistance? And then now with that big body blue candle on September 11th closed above, you see now how it's holding as support yesterday. That was yesterday's lowest point is support, okay? And then what we can do is a zone. We use our yellow line as the point of interest. Then we kind of capture our wicks. They're all relatively the same size. So what we can do is we grab them now. I can see it came up there, back down. I got that wick. This impulsive wick is in my zone. That impulsive wick is in my zone. That impulse wick is in my zone. That impulse wick is in my zone. That impulse wick is in my zone. Now I see a big blue candle closing above my zone. So that's where it would have been red leading into that day. Then when that day officially closed above, same zone. I'm not changing the size of it. I'm changing the color of it, making it green, stretching into the future. And then you can see yesterday how we came in and it went right back up, falling close above. I can see today we came in, we got a higher low right in that green box. Now it's waiting for kind of Wall Street and Powell. We could definitely continue to fill back up, backfill these wicks, and trade right into 50% of that bearish candle coming down, okay? But right now, it's still holding support. So it has not broke this as of yet. Maybe during Wall Street or FOMC, it could break this and continue to drop down. So right below this yellow line, if we continue to drop, where could we go? There's a point of interest right there. Where did this big body candle get produced? It got produced right here at 45,473. So if we drop from yellow line to yellow line, we have to know that that is a supporting level right there, okay? So right now on the daily, you can see now we got to start to dissect what we got going on over here. So do we have an all-time high on NASDAQ? Yes, we did have an all-time high right there, orange line, all-time high. 46,135 all-time high. And what happened since then? So we had that big all-time high. We had this big bearish candle last Friday come back down. I'm sure that's relatively right around 50% of that big blue candle. We will verify that in just a moment. But then I can see how over the weekend that we opened up Monday was strong. We came back up. I can verify that we're 50% right below that candle. Continue push down, green box, come back up, close with some indecision, some bullish volume. Next day, yesterday, we opened, so we can follow kind of yesterday's volume as well. Do we have a point of interest from closing and opening? Yes, right there, yellow point of interest. Did we have a high yesterday? We did. How high did it go? Right there, a wick, a wick. I would look at 50% exactly of that bearish candle. So how do we do that without just guessing? Right there. Grab your Fibonacci tool. There is exactly 0.5 of that bearish candle. Then I can see how we traded into it on Monday, rejected back down. We came up there yesterday, looked lower high, and pushed right back down all the way down there. Today, are we going to continue to fill those wicks and test again up there? Or are they going to push this thing back down? So right now, how did we trade yesterday? Bullish, 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 got rejected, lower high, came back to the opening balance. It was bearish all day, came back down, came back down. That was low of yesterday in that green box. Then we came back up, triggered all those buyers, and we closed right there. Today now, okay, so let's follow closing balance, opening balance. There's where we closed yesterday. Today, this is where we opened. 45,782. I don't see any monkey business. There was no gap downs, gap ups like they got me with that 1 minute trade where they gapped it all the way down. They bypassed all of those orders, came deeper in the depth of the market, picked up, came, stopped me out, and then went back up. So that's manipulation on 1 minute. That's why I suggest not trading 1 minute candles if you don't understand what is going on, okay? They could do that on the daily. I always look, do they gap down, gap up daily candles? And I look if they fill those imbalances. Here you can see it's a clean transition. Clean close, clean open. 45,782. What happened now? Let's back test. Let's go over this. It opened. It was initially bearish. How can I tell? Because I know how to read a candle. It opened and the wick is the shadow. It's the tail. It shows us evidence. It's the footprint left behind. It opened. It was bearish, 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 bearish. This was a big black candle that came all the way down here and it stopped right there. It found the lowest point of the day. That's where the lowest point is. 45,705, 700. Are we, see the green zone? The green zone was for a reason. If I get now my Fibonacci tool just for backtesting purposes, where's 50%? It's right there, okay? So you can see how close we are to 50%. Today's low is right at there, at 50%. I could even take it a little further and draw a point of control right there, of 50% of the green zone. This is when you're taking it to the next level. You know, you could have a point of control within a point of control. That's how technical it gets when you're trading on the 1 minute candles, okay? That's when you can look for precision entries like a sniper, okay? So I can see that that zone is still holding up. I can see the buyers got filled, they came, they got activated, coming back up, coming back up. The bar came back to the opening balance, and the buyers now are asking to trade all the way up here where it came up. We do have the high of the day wick. You know, it's right there now. I can see this tiny wick, so it can possibly continue to break out of here. I would be watching what happens here at this yellow line, 45,850, and if we can continue to fill up, backfill these wicks and test that yellow line, and if it continues to go, bodies of interest are right there, right below our all-time high, okay? So not too far away from it again, okay? But if we look at the overall move, it came up, it's pushing back down. We could get that next leg coming back up, or they could kind of push it down and start to sell it off. So we're still holding strong support. From the daily, let's go to 4 hour quickly because it is 10 after 9. 4 hours, okay? I can see exactly when we hit the all-time high on the 4 hours. It was Thursday last week. Friday was selling. Sunday, here's the weekend. Kind of Monday, we opened, kind of consolidated on these 4 hours. Then this big bearish bar came in yesterday, 6 a.m. Came in, pushed all the way down. And then they continued breaking down, coming back up. Now I can see the 4 hour candles. Are they making a double bottom in this green box? Came down, one bottom, there's the neckline, second bottom. There we are coming up right now. We are impulsively breaking out of here at today's daily high. Are we going to continue to come up to that nice 45,850, that daily point of interest? Is any of this 4 hour bar in the next 15 minutes going to close above here? Because follow the closing 4 hour bar too, because it's going to take us into FOMC. When we come back, we will analyze where this 4 hour candle and the next 4 hour candle, because the next 4 hour candle is 10 to 2 p.m. and 2 p.m. is a new 4 hour candle right when FOMC starts. Everything is lined up for a reason. Why are they starting it every day at 2 p.m.? Why? Is it just because that's when Powell wants to come and talk? I don't think so, okay? I think it has something to do with how candles open and close, specific time frames, all of that, okay? Call me a conspiracy theorist, call me whatever the hell you want to call me. I don't give a shit. I watch this stuff every single day for the past 20 plus years. Why does it always open at 2 p.m.? Why can't he come in at 3? Why can't he come in at noon? Why is it every single day at 2 p.m. Eastern? Why? I don't know. I ask questions. Call me crazy. Call me what you want. I don't care. I call out bullshit when I see bullshit. Okay, so we got a strong 4 hour candle closing in 40 minutes. Look at these. This is a wick and a wick where it previously came up and pushed down. It previously came up and pushed down. So now I'm doing my analysis on 1 hour and 4 hour. So I have to have a white line right there, okay? Just to let me know that that was a 4 hour resistance, 4 hour resistance. Now we got 4 hour volume. If we come back down, that might be our hourly support at 45,800 and build off of this, okay? So we got a strong zone below us. It is holding and coming right back up. But we are still, if we're buying, we're still counter trading against all of this, okay? You got to understand that, okay? It could just come right back up here and then they drop it right back down, right? Because if you look here, the highest all-time high since then, lower low, it came back up here, lower highs, went pushed back down for a new lower low. It could be coming right back up now and get a lower high, and then guess what? They smack it back down, okay? That could happen. Now looking at the hourly. Okay, look at the hourly. Very, very choppy. 4 a.m. This is right after London market. Wow, like it was crazy in here trading, you know, right, Wall Street times. Look at this big rejection candle. This was Tuesday. Remember, we had to sell. They took out the highest point of the day, remember? And then it came back down and we had that sell coming down. So that was us. We were selling that yesterday. Remember, it went from yellow to yellow tape. Hopefully some of you guys got that 100 pip drop on US30. And then since then, it came all the way back down, lowest point 10 a.m. Mid-afternoon, came back up, kind of consolidated during the Tokyo Asian session over here, transition. Here's now the futures market, continuing bearish. Now we're 9 p.m., 10 p.m., 11, there's midnight. Now we're coming right back up. We formed a lot of hourly support down in here. Here's 1 a.m., pre-London, there's London, 4 a.m., there's 5 a.m., 6 a.m., 7 a.m., and then here's 8 a.m. coming back up. So look, guys, we're at the highest point. We got 47 more minutes for this hourly candle. That's why we got to watch this white line. The white line came from the 4 hours, but you can see right there, hourly resistance, hourly resistance, hourly resistance, hourly resistance. We just had a 1 hour candle close above that white line. So white line could be support. However, if you really want to get real technical, we'll move this line exactly to 50% of this closing hourly candle. So let's do it. Open, close. Okay, so this is us moving it. We're going to manipulate our own. Look at what I'm doing. I'm bringing it down to exactly 0.5. And then you see that I got a little bit of wicks above me. Okay, that's fine. I'll capture them with my point of control. There's my green zone. How do I verify? How do I backtest? Go backwards. And then you look right there. At that point, it should have been a red zone, back down. Red zone, in, out. Came in, red zone, back down. Came in, red zone, push down. Now I have a closing body above. Now I can flip the zone green. And if we're trading back in here, yes, we could look for pullback buys in here. Now it's coming down, coming down, coming down. So if it comes in here, it could come all the way in and go all the way right back up. But with Wall Street, there's going to be massive volume. So it could cut through this zone, no problem. It could come down to that daily position, maybe bounce off there, come up here, and then this is now resistance, and then the market is selling back down, okay? So that's one zone we have already created that we got to keep our eyes on, okay? So now we can go to the 5 minutes, and this is what we got going on, okay? So 5 minutes are making, when I'm looking at structure from the lowest point of the day, they made a higher low bounce right there. They got a higher low pivot right there, right? And I see how they're all separated by about 20 to 25 pips. So if I know if I'm scalping in these ranges, I know what to be looking for. There again, volume closed above, retested yellow line, daily holding, continue to break out. This zone, remember, was the red to green flip. If I look back now, it should have been red right over there where the 5 minutes came in, back down. 5 minutes came in, back down. 5 minutes came in, back down. Red zone still holding, but now we saw our first green bullish bar close above at 835 and came back down, retested, went back up, came down, retested, took us to the highest point of the day, and now we're coming right back down. So right up here, highest point of the day, purple line, bring it down to those kind of like 5 minute bodies right there, and that is our red resistance right now going into Wall Street, okay? So we're not too far away. Guys, we're going to watch this now with our daily bar indicator to let us know how the daily looked. Remember, we opened right here. This yellow line is the opening balance. So keep an eye. If we come down here, that's the opening balance. That's why I have that yellow line right below that green block. And we know that it was initially very bearish when it opened. We can see it come all the way down. We started to get a bottom right here at 10:30 p.m. At 2:15 a.m. We got a nice wick at 4:35 come down there, and since then it's been creating a higher low, higher low, higher low. We're right back at that opening balance. We flipped, see where we pushed up to the highest point of the day, and now there's a little bit of wick coming back down. Okay, so if you look at this all like one move, we got our big move neckline coming right back down. Will it come down into the green zone down in here? Will it go back up? Okay, create a new high. Will it come back in here, double top, and then they're dropping it? All of these things to consider when Wall Street opens up in the next 15 minutes, okay? So just now to complement the chart, if you want to use an EMA, like an indicator, EMA 9 is this green line. We're right at it. And our EMA 200 is, where's the EMA 200? Right here, this purple line right down in here, okay? Okay, so that's US 30. We'll leave US 30 right over here to the left of our chart. We got NASDAQ right over here as well. Let's take a look at what gold is doing. Okay, so gold. Okay, so gold coming back, you know, I can see a top right now. Okay, I can see wicks and bodies. So right there on gold, I can see where it came down. There's where it broke the neckline right there. Remember that 50%? It came down. That was bearish, bearish, bearish. But look at what it came right into. That point of interest, that white. Again, if you had a pending order or did something down there, you could have got activated back in a buy and got yourself like just a come up right back up to that zone. Sometimes as a scalper, you know, if you get filled there, just looking, that candle body came up 20, you're up 30 pips. continuation, 50 pips. Just on that where it came down, if you got activated, trading right into the red zone, and you know there's a wick, and you're disciplined to take some money out, you did a fantastic job. Now you see it's an M top. Look at what they're doing, what they're creating. Came up, back down. Forget that wick. Look at where the body closed right there. There's the neckline. Green zone, 50%. That red line. I haven't changed anything. Coming right back up. There's your second top. Here's your M drop. Okay, so now you're looking, they already broke it down. The wick did the damage, but now the volume has to follow through. So if the volume closes black down in there, you could flip that and make that red, and then the sellers have enough to continue to fill that wick and drive through the zone and continue to drop it down in there. So if you're trading gold, keep an eye on that if gold sells during Wall Street to look for that move below there. However, if it keeps building off of here, look, it came down there, higher low, and closes above here, you could continue to break up bullish back up to this red zone, okay? So that's what I would be looking at if I was trading gold right now, is I would be watching those levels. Okay, but we're going to stay focused on US30 and NASDAQ going into Wall Street. Let's just again go over any news during Wall Street just to refresh ourselves. We have a lot coming out of Canada at 9:45. We have basically our FOMC, for Canada. We have our Bank of Canada rate statement. We have our overnight lending rate as well. We are looking to do the same thing. They are forecasting a 0.25% decrease from 2.75 to 2.5 here in Canada. That's fantastic. Hopefully they can go even lower. Lower interest rates are good. I like low interest rates. And we have the Bank of Canada press conference after our call at 10:30. You have your crude oil inventories at 10:30. Then Dave will come in for some post New York with you guys. And then the big day, the big event is right over here, 2 p.m. We'll be starting, guys, everyone on YouTube. We'll be coming back. Hit the likes on YouTube. Subscribe to the channel so you get notified when we do come back. It will be around noon, 12 or 12:30. No later than 1 p.m. because we got to come in real quick, do our charts, and get right into it, okay? And we're going to go till 3 p.m. and then we're going to call it a day, get a break, because I got to come back later this evening and do a webinar. Okay, and then again, pick your security that you're comfortable with trading. There's NASDAQ. Some of you guys love NASDAQ and only trade NASDAQ. God bless you guys. Continue trading it. There's others, and I'm including myself in this. I prefer trading US30. This is my security of choice. And then if you're trading gold, we can flip-flop back to gold, but we'll be focusing on index, okay? If any of you guys need a break, you're welcome. We have 10 more minutes till market open. Go for a break, come back, we'll still be here with you guys. Holy, Wayne, that's unbelievable. Sorry, I'm just reading what Wayne is writing in the chat here. Manchester United have announced club record revenue for 667 million euros or pounds. Record match day revenues up 17%. Wow. And they're not doing really well. And yeah, it's kind of like the Dallas Cowboys, okay? I'm a big Cowboys fan. Dallas Cowboys in the entire world, okay? So just talking a little bit of sports now here, guys. Dallas Cowboys, when we're talking all sports, we're talking now European football, like Real Madrid, Barcelona, Manchester United, Arsenal, Liverpool. We talk baseball, you got Boston Red Sox, New York Yankees, you have Los Angeles Dodgers, basketball, you have like the Los Angeles Lakers, New York Knicks, these big franchises. In hockey, you got Toronto Maple Leafs, you got Montreal Canadiens, you have these big teams, right? And football, we have the Dallas Cowboys. They are the highest gross team in the world, sports team. I think they're now listed at $12 billion. Jerry Jones has taken that team, where he bought it for like 300 million back in the day, and now it's worth 12 billion. Like, I cannot believe it. It's worth more than like Manchester United. And you know why? It's us crazy Cowboy fans that are continuing to pay for these tickets, where they haven't won a Super Bowl since the early 90s, 93, 94, and 96. I remember I was like 11, 12, 13 years old at that time. You know, that's when I fell in love with the Cowboys. And since then, have not won a Super Bowl. But I'm continuing to pay for these high-priced tickets to go and watch them. And they cannot put a good team together to win a championship. So, like, again, I'm going this weekend to Chicago at Soldiers Field to watch Dallas play Chicago Bears. It's me supporting these stupid franchises. That's how they make all these monies, guys. It's the fans. We're crazy like that. But some of us enjoy sports. You know, it's a hobby. It's fun. Sorry with that little sports talk there, but can you guys believe that the Dallas Cowboys are worth more than any franchise in sports around the world? Like when I'm talking European football. Like I've never been to a European football game like in England. How many fans are in a stadium? 100,000? Like when there's a Manchester playing Liverpool, for example, is it 100K at least? $58? Oh, I thought it was more than that. Yeah, if we look here, highest ranked sports franchises. Let's see. Okay, here it is. Yeah, as of 20, I know that they're worth 12 billion right now on the latest reading, but here it is. Like, as of 2025, the highest ranked sports franchises are Dallas Cowboys, valued at 10.1 billion, making it the most valuable sports franchise in the world. I saw last reading, Jerry said there were 12 billion. Number 2 is Golden State Warriors, Steph Curry over here, worth 8.8 billion. New York Yankees, number 3, 7.5 billion. Los Angeles Rams football team, 7.6 billion. They built a beautiful stadium. New England Patriots, old Tom Brady over there, 7.5 billion. See, like our European teams, our soccer teams, our football teams are not even in here in the top 5. So, you know, you can see how much revenue the Dallas Cowboys bring in right there. So, wow. Oh, Nonso, Real Madrid versus Barca, 109,000. Wow. I know that there's a stadium in Mexico. I believe it holds 200,000 fans. A soccer stadium in Mexico. I don't know what it's called. Maybe some of you guys know, but I think it's located in South America and Mexico. 200,000 fans. Is it in Brazil or Mexico? Might be Brazil. Maracana. That's what it is, Jeslyn. Maracana. Is it Mexico or Brazil? That's what it is. Maracana. North Korea have the biggest stadiums in the world, 150,000. I didn't know that. I didn't know that. Tony, wait till you see the cost of beer and food at Soldiers Field. You'll see how the money's made. I'm going to bring a pack of hot dogs in my pocket, Tony. I'm going to bring some hot dogs in my pocket and bring my own beer in my pockets. I've never been to, how's the Chicago tailgate? I've been to a lot of football fields, loving the tailgates. I can't wait to see the Chicago tailgate. Nothing will ever beat the Buffalo Bills and the Bills Mafia tailgates. If you ever want to really witness an amazing tailgate, you got to go to a Buffalo Bills game. in November, December when it's freezing cold out there. You're gonna see some crazy things. Brazil, Argentina, yeah. I'm gonna be selling hot dogs at the game. I'll buy them here. I'm a trader, right? I'll trade some hot dogs. I'll see if they're selling $10 a hot dog. I'll cut it in half. I'll be there selling them $5. I'll be making money while I'm at the game. Always thinking about making money. These hot dog prices are too high. I'll cut them. And you know what? I'll even take Canadian $5. I'll even take a hit. You know, you don't even have to pay me in American dollars. Give me Canadian $5. That's like $3 American. Yeah, you guys might see me outside Soldier Field selling hot dogs. Hey, wherever I see a business opportunity, I'm always looking to make money. Okay, guys, let's now look to make some money in these stock markets now. Right now, we have 1 more minute to go. Here we go. Okay, so bullish, showing bullish strength. We're still holding this, so we could get that impulse breakout. We're trading at, that's it. We got a new high of the day. Same with NASDAQ is trading at this point of interest. The high of the day is right up there. Again, have rules, guys. Double check your lot sizing, contract sizing, spreads, anything. I got to switch focus because I was looking at gold. Now I got to go to US30. Here we go, guys. And either have some rules. Wait for a 5-minute candle to close unless you're going to go in right away. But or wait 5 minutes, 15 minutes, whatever your rules. I'm going to wait 5 minutes unless I see something dramatic, okay? So let's have some fun. Don't over risk. Don't over leverage. Remember, we still have today's FOMC session later today. So let's see how the markets are moving. So we got a nice big bullish move coming right back up. That's that daily point of interest right there, that 850. So if we can continue to drive above here, we've got a lot of room to drive, okay? Let's see now if there's a rejection. Wow, okay, strong move. Okay, so close right at the high. That's that ignited push. Okay, so we had this yesterday where it did very similar, where it broke out, ignited, then it came back down. So, you know, if you were already in, congratulations. If you just bought that early candle, again, congrats. But let's see now. For us that are not in, that's the first 20 seconds. I know it's exciting. For us that are waiting for this 5-minute bar to close, I know, try and control your FOMO, try and control your urges, but we still have 4.5 minutes to go. I know, guys. It's really hard when you see a bullish candle breaking out like this and you're not in. What do we all want to do? We all want to buy the highest point, and then sometimes when we do that, the fear of missing out, I have to get in, I got to buy in, and then that's when they bring it down, just like NASDAQ. Okay, so it impulsively broke through there. Again, that analogy, if I was fear of missing out, I got to buy, then they can bring you back down. We saw yesterday where they slammed the candle down, okay? So just, again, if you're not in, don't get stressed out. Just let's let the volume show us how high it can go, how low it can go, where it can close. We'll figure out a point of control off of it. We could trade a pullback, or we can continue to analyze. That's my recommendation. If you're already in, congratulations. Just learn how to control your, reduce your risk. If I was in a buy on that and I had a stop loss prior to Wall Street, I would be at least at a break even right now and maybe scaling a little bit of profit on that, okay? But look at NASDAQ. Okay, it came up impulsively. They rejected it back down. It's refilling back up. Look at the daily candle of NASDAQ. It's kind of this indecision. Now, okay, so see how it got rejected, coming back down, right? US30 could do the same thing, coming up there and they reject it back down. That's why I'm always reminding you guys, you know, to bring your stop loss to break even, take a little bit of profit out, because things can, if I go and show you guys yesterday, how yesterday traded, you will know exactly what I'm talking about. Unbelievable. Okay, so US30, very, very strong move here. Okay, now we got half of the candle is exhausted. Now it's like a soccer game. It's like a football game. That was halftime. Everyone went in, had a beer, and had a hot dog. Now it's time to watch the second half. Which team is going to take over? Okay, is the blue team going to win or the black team is going to win? Just like a sports game. Who will have the momentum going into the close? Good. Sergio, you pipped and dipped on US30. Congrats. Mosharef, today has made up for yesterday. Oh, good. You recovered your losses yesterday. Good job. Sherry, you pipped and dipped on Dow. You're up 2% today. Unbelievable. Sherry, I need you to do one of these sessions with us. Your consistency is unbelievable here. You're going to be the new one taking over here. QH, you're at break even in the trading gods now. Hopefully it works out for you. But guys, you see like NASDAQ had that nice big bullish move, but look at it now. Now it's a big bearish shooting star candle coming right back down. Wow, iPad, you're done for today before FOMC with 4%. Good, congratulations. Then, yeah, like you said, take FOMC off. No point in trading, no point in risking. If you do decide, risk 0.5%. Keep 3.5% in your pocket, risk 0.5%. Test out a few strategies, a few theories. But if not, take an entire day off. Congrats, that's amazing. Eugene, we already traded gold today. We dissected gold for majority of the call. Gold is right here, still holding. Look for your breakout. Look for volume to close and continue. We had a buying bias. I got stopped out, but gold is still strong. Okay. Right now we got to watch close of NASDAQ and US30. Okay, so they didn't take out the highest point of the day. The highest point of the day is right there. It came in. That's a lower high. But at that daily point of interest, the yellow line got rejected back down. So it's trading back down to this yellow tape. So we'll see where it closes. You can see that they're moving in opposite direction. NASDAQ has a bearish candle where US30 is a beautiful bullish candle. Now it's closed, 5 minutes. So let's do some analysis now. There's the opening balance. There's the closing balance, okay? Where's 50%? Right there. There's exactly 50%. Where's my point of control? If I'm looking for a pullback later today, you know, we got to continue to do this. Okay, how else are we going to catch a pullback? Okay, so I've identified my zone. Right now, there is no pullback. It opened shallow, small wick. There's your firecracker, guys. Okay, I'm not in this trade, but if I was, I would have recognized we closed 99.9% right at the high. So that firecracker analogy I always talk about, how it opened small, shallow pullback and came right back up and popped. Even as a 1 minute scalper, that's sometimes exactly what I'm looking at. There's the 1 minute candle that closed above, small wick pop. If just scalping that candle alone, just on the 1 minute, if you just know you're looking for 10, 20 pips, that candle is 35 pips. You could have literally just got in and out of that candle. And look on the 1 minutes, that yellow line now, the daily point of interest is representing 50% of that bearish candle, the bullish candle. So if it pulls back, could catch a wick and continue. This one also has a short wick and could continue to pop through there, okay? So just looking on the 5 minutes, this is continuing. 46,000. Holy shit, guys. Wow, it's driving, okay? So our next yellow point of interest is that 46,100. There is the all-time high right up there. Oh my goodness. Okay, this is ridiculous. Here we have points of interest on the 5 minutes. I can see where the 5 minutes came up previous, back up there, back down, little impulse. So 46,000, 030, 033, 035, this red line. If it comes up there, that's where it could come back down. Unbelievable. Holy. Oh my God, US30 is trading so good lately in Wall Street. It's driving me crazy over here. And look at NASDAQ. Okay, so NASDAQ rejected. Now we got to look for volume to confirm closure below here because we have too much wicks. It came down here, went back up. Came down here, that's what created the lowest day, came back up. Came down in here, look at the volume above. We retested green zone, back up. Retested green zone, back up. Now we're coming down after they took out liquidity, swept the high. This could be, again, an impulse candle, but I would wait for confirmations for NASDAQ to see if it will officially close below here, because if it does, you can make your green zone to red. Maybe it will pull back and then you can go down with the selling. However, it could just come down here, fake out the market, come down here, fake out the market, and go right back up. So let's look. Maybe we can get into a buy the dip on NASDAQ. US30 is unstoppable right now. There it goes. Like, it didn't even allow for any potential pullbacks. So it's just continuing to drive. If you're in, you're in. Great. If you're not, you've got to learn how to wait for a pullback. Maybe NASDAQ might be our security over here. I know I don't trade it too much, but I'm following what happened. They came down here, grabbing liquidity. Again, let's follow that yellow line. Where will it close in the next 90 seconds? We could use this for support. Maybe buy it back up to that red line, okay? Holy, and guys, if it comes up to that red line, you know, please be doing something up there, because that's where they could kind of put a lower high right below that daily position. I didn't just guess that red line. I came and looked all the way down in here, and you can see where it was resistant. When it broke down, came back to that red line, back down, came up to that red line, back down, came up to it, back down. There we kind of closed, but with some indecision, and then dropped from there. So that red line is a good target, guys, if you're in that. Holy shit. Wow. My goodness. Okay, I'm putting an alert here for today. If it comes back in here, I want to maybe look for a potential buy in there. NASDAQ, very bearish, okay? So let's watch the close here. Wow, Xi'an, you got 200 pips out of there. Unbelievable. Holy, what is going on with these markets as of late? And then again, what we can do with the close of that body, again, figure out 50%. That is a target up there, but your next daily position is right there, and your all-time high is not too far away. Here's the close. Let's, sorry guys, I got to do a lot of things here. Okay, close. NASDAQ did close below, so go green to red momentarily. Okay, it could continue to sell down. If we're looking, if it will pick up volume and protect the lowest point of the day, we should see it maybe build a little bit and maybe build its way back up. Maybe we could look for, guys, look at that. Ignited open on US30 with no wick. Okay, there's no stopping this thing right now. There's not even a wick. It closed right at the high. It opened, ignited, and continued to drive a little bit more, okay? So if it comes back down, that turns into a shooting star, then we could start to retrace back down. There it is, the shooting star, okay? So that's where you don't got to get too greedy, guys. When you see that there's no wick and it opens, ignited, it's giving you a little bit more. Don't get too greedy, because as soon as it comes down, shooting star, it's going to come down. Now what we can do is, again, 50% of that bullish candle. Let's just create a zone right here. 50%. Let's know our point of control of this body of volume. Okay. Holy, wow. Man, what a move. Okay, so significance of that red line came from backwards. We looked back. Okay, you see now how NASDAQ could be coming up. Okay, so it came all the way down, higher low relative to these wicks, kind of tweezer bottom with that wick right over there, coming back up. So I'm watching NASDAQ to see maybe it will come back up, close above, and then maybe have a little bit of a bullish leg to retrace back up. However, it could just continue moving down bearish, and you're targeting this lowest point of the day. Good for you. You closed 60%, left the rest to run for the daily high. Fantastic. Great. Good job. As long as you closed a little bit out, that's perfect. Okay, and don't forget, guys, in the next 3 minutes, we got a new 15-minute candle coming in the market. And also we have a lot of high-impact Canadian news regarding interest rates in Canada coming up in the next 5 minutes. Sell gold. Are you guys selling gold? I don't know about that. Still above here. Still volume is above. No, it closed above. So I would be going green zone. I don't know if you would want to be selling gold right now. Still retesting this and continuing to drive. Nothing is suggesting selling gold right now. Wow, okay, let's see. Guys, here's a setup, okay? So let's see. NASDAQ now is coming. Let's see, will they take out that low of the day, grab that liquidity, and reverse it back up? Or is it actually going to push and close, falling below there and then continue to sink down? So, wow, markets are really moving today prior to FOMC. Okay, so we're coming in the green zone with 2 more minutes to go. Should we enter right now or should we wait for this body to close? It's coming, continue come down, I'm watching it. There we just tapped into exactly 50% of this blue candle, but we still have minute 45. So it could continue if it wants to continue to push down. Let's see. So it's got a wick, it's fighting right there, came, and then now pushing down further. Will it hold our green zone here? Notice NASDAQ is coming right back up as well. Okay, so we'll figure out where these bars close. And then if it can come right through this green zone, there's my yellow line right there. Okay, so that's a daily point of interest. This holds more weight than just this point of control of this 5-minute candle. This one holds a little bit more weight down in here. And now we've got 1 more minute to go into the close. So now we got to follow this 1 more minute, and then we have a new 15-minute candle that's going to open as well in the market. Okay. So you see how it's still transacting in that point of control. Came all the way down to the bottom. It's got a wick coming right back up. Where will it close? In 30 seconds. So, oh man, you know, got to just wait for this thing to close. If you want to go in, you can go in, but you might as well just wait the next 20 seconds. That's what I'm trying to do. Just figure out exactly where it's going to close. Some of you guys maybe went in. Maybe you guys got activated. That's fine, you know, but here's the close. I wanted to see if it would come a little bit deeper down into here. So here's the close. Get ready. Closing. Okay. Bearish ignited. See for a quick wick if it will catch a quick wick and flip. That's a bearish ignited candle coming down. They took out the low. Let's see what type of reaction maybe at this yellow line, the daily point of interest down in here. Okay. Remember, it opened ignited and just dropped. Okay, so that's a clue that they're dropping it, but let's see if they can pick up a wick. Will they flip this candle then turn back up bullish? So far it's got a wick. It's still transacting in the zone. The volume is still below that red line, below 50% of it. So it's still dropping. Still got that ignited head coming down. There it kind of got back in. Okay, so if it kind of flips above here, okay, I'm going to buy this. I like how it came deep down in there. I'm going to go into a buy. I'm going to place my stop loss. Again, I've been using a very tight stop loss today, so I've gotten stopped out. So I'm going to give it room to breathe below that next point of control, that green zone down in there. But then I'm looking for a bigger move to come back up to test that yellow line or potentially the all-time high. Okay, so can it continue to build off of this block? This will be my final trade of this session. I'm in a US30 buy, so I'll be looking again to see if we can get volume to close back. Maybe now just move that red line up to there to see if it can build with this. Continue that leg coming back up. Maybe retest that daily point of interest. Again, 46,100 or possibly the all-time high, orange line up there, okay? So I'm testing the first block, but if it needs to come deeper down into here, you know, I've given it more room to breathe. I've given it more stop loss than I traditionally do. Sometimes when I'm trading, maybe I'll have my stop just below this candle right here, very tight. But I'm watching it to see if it can continue to build for a bigger move, okay? So got to continue to watch, see how it reacts inside of here. And NASDAQ is still below, has not, you know, came and closed above yet. Now it's coming back up, but we'll wait for that bar to close as well.
Okay, so we got this bullish pin bar candle. Can we turn it into a hammer and drive a little bit? 50% is right there, but with Wall Street volume, we could maybe push through that. Okay, so if it can just get back to that point of interest, just filling up to those bodies of the candles would be about 40 pips in profit. But then to come back up to test that high wick could be about 50 to 60 pips up there. Okay. Yes, Wall Street does trade with bigger volume. You know, I've got a bigger stop loss as well, so I've decreased my size substantially in this. But let's see how it can build. Maybe it will consolidate in here, maybe form a flag right inside here as well. And keep an eye on NASDAQ as well. If it can close above here, you flip that zone green, could be looking for a retest buy off of that as well. 90 more seconds to go into the close. Yeah, I'm in a buy on US30. It's basically, if you want to join in now, you're right in where I bought in, okay? Now we got 1 minute, 20 seconds to go into the close. Okay, it's a nice bullish bar. We're testing, you know, if I was to cut that black candle in half, we're right at the 50% of that black candle right there. Okay, so, and look at it, 46,000 and a quarter, 0.25. Okay, so that's right up to 50% of that previous candle. I know you guys are not looking for 20 pips, but that's 20 pips right there, you know, for those 1 minute scalpers. We're looking more to see if we can kind of push to create a new high. But we got to go one step at a time. We got to get volume to close above 50% so we can build off of this to continue to drive to our next resistance point, okay? So it's struggling right now at that 50%. Sellers are still there, showing that they're pushing it down. So now we got to watch into the close, the last 20 seconds. NASDAQ, again, if it closes above here, guys, flip your red box green. You could be maybe looking to take some potential buys off of that block, okay? I'm going to assume it's going to close above there, NASDAQ. So I'm going green. Okay, so it closed right at that daily point of interest, opened ignited too. Okay, so that ignited push on NASDAQ could drive a little further. If it needs to come back and pull back, you could be looking for maybe a possible buy entry in that green zone. Okay, sorry, I didn't see how US30 opened. I was looking at NASDAQ, but I can see right now it opened bullish ignited. It came up, got rejected, back down. So we're trading back into this green point of control. Okay, can we get some wicks? Can we develop in here? Can we build our way back up for that next leg coming back up with still holding the zone? So we just retapped exactly 50% again, got good support. We got our blue volume coming back into the candle. We got to drive it back up and retest that 50% of that candle, okay? Sellers are still here with that lower high, so they want to push this thing down and continue to maybe fill down this wick. But we're in this, still this bullish point of control. So can we still maintain this while asking to trade near these highs and build our way back up? Or are sellers going to push this thing down? NASDAQ, good move, hasn't retraced back, just right off of that daily point of interest filling. Oh, I didn't even see the Canadian rates. 1 second, let's just see what happened in Canada over here. Okay, so they decreased 0.25% to 2.5. Okay, so pretty much US maybe will do the same thing. Okay, so we're building our way back up. Again, we got to build our way back up and make a new higher high, right? We got to make a new higher high to get out of here. We got good structure in our green zone, higher lows. So we are building, we are holding. Our depth of market is there, but we got to close with some conviction. We got to make a new higher high and close strong in order to continue to get big buyers asking to trade. We're pretty much near the all-time highs. We're not too far away. There's the orange all-time high. That is the daily point of interest right at 46,100. And we're just still in this consolidated flag right now. That is still building with both buyers and sellers. And this is the halftime show, okay? So this is when we're all eating hot dogs and having a beer at the football game. Now the second half begins. So who's going to win the second half? The blue team or the black team? So this is what we got to watch now. Hopefully we're not eating too many hot dogs and our stomachs don't hurt here, but we got to continue watching second half of the ball game. We got to watch who wins this, okay? So far the blue team is winning, but we need also a closure above here. That is so important for the depth of market. If we can close above this point of interest on these 5-minute bars, if it just comes up here again, it could definitely push it right back down. So we are getting right up there, guys. Okay, so there's the break. That's about 40 plus pips, okay, 42. One more push could be about 50 pips right there. But more importantly, the closure of the candle next 90 seconds. If you want to eliminate your risk or stop loss while you're up 40, 50 pips, you can certainly do that if you like. You don't need to keep an open stop loss like this when we're all the way up here. You can bring your stop loss and go just below this yellow line. Okay, you've significantly reduced it. If you need me to do it, I will do it, okay? So I'll bring my stop loss just below that yellow line, okay? So you see how I've reduced my stop loss? I still have a little bit of stop loss in the market, a little bit of risk, but I've reduced it from being all the way down in this green zone, okay? How much have I reduced it? By 80 pips. That's substantial, and now I'm 50 pips in profit, right? So next marker is that high right there, previous wick. But I'm telling you guys, closing volume will be the most important thing. Closing volume. You can scale out if you like, or just continue holding the trade. Some of you guys might be at a break even with zero risk. Please manage your own account. If we can't get that closure, man, that's going to be demoralizing for the buyers, because then we come back down, we might follow momentum off that wick. Next bar will open bearish ignited and continue to try and push down, okay? So this is very important. If we can't close above here, can we at least close above 50% of this black candle? And then we got to build one more candle. It would be great if we could engulf everything right now, but it doesn't look like we're going to do it. Here's the close. Oh, that sick little push at the end. Okay, so that was a massive selling order that just came in right at the end of the market. Look at where it closed, right below that red line again. That was nasty. Okay, so it looks like it's going to push down. Okay, unless the buyers can continue to ask, but that was a sick push down. Okay, so I have a feeling my stop loss is going to get triggered just by watching how that candle came down. Unless we can continue to build something at 50% of that candle right where my cursor is without having to come back into this bigger green zone, right exactly where my cursor is. If we can develop a wick and get our buyers coming strategically right in here again, we could continue to push up. But I can't tell you how nasty that wick is and where they closed it below there. That's telling me, it's signaling that it wants to push down. That was gross. You know, when you're tied, when the football game is tied and the last 3 seconds the other team scores and that's it, the game is over. That's exactly what happened right there in sports terms. So you know it hit your break even on US30? No problem. Break even is good. This is going to hit my stop loss. Okay, so at least you escaped without getting stopped out. Break even are fine. No win, no loss. But I'm going to get stopped out here. I'm telling you, I could tell just by how that candle came down. I have a gut feeling. This is where sometimes I go to a break, like I'll come up to a break even. But sometimes you have a gut feeling of things just by watching how candles close. Hopefully I can break these things down for you guys and you guys understand how important it was to close above there. We didn't. How important it would have been to close above that red line. They brought it right back down. And this is what I'm telling you. The sellers are now in control. So we still have this green zone that's being retested. Our buyers are still in here, still momentarily holding this. But, you know, the market wants to do this. It wants to come through here, activate all these stop loss orders down here, and then maybe take the market up. Okay, but when it takes it back up, this could be a red zone, then they drop it back down here. Okay, so we know what they're doing. You know what they're doing. Still building. Okay, so we got equal low wicks at a good location at exactly 50% of that green zone. We had the buyers asking again to trade back in here. We got 2 more minutes to go on the candle, so we haven't broke as of yet. Those equal lows are holding. Okay, so it's still supporting this move. We have not technically lost it as of yet, but it doesn't take too much effort for a seller to come back down there and break that and drop it. So hopefully we can continue to hold and build this candle back in here. We'll try maybe one more attempt, if we don't lose this low, to continue to break back up there and get that closing volume above there. Remember, this is a long ball game now. It's a 9-inning game. We're in the 7th inning stretch, right? Have you ever been to a baseball game? 7th inning stretch. You stand up, they sing the national anthem, you go buy some hot dogs, you have a beer. This is the 7th inning stretch now. It's this consolidated zone. Buyers are buying, sellers are selling. Okay, but we got good response, equal lows, tweezer bottom lows. We're in buys, so we welcome tweezer bottom lows. It's holding the equal depth of the market without allowing it to break for a new lower low. But closing volume, I'm also looking at this. Will this bear volume engulf our previous blue candle? Then next one, we'll start with that bearish momentum to take out these tweezer bottom lows and drop down to the bottom of our green box or down here. So good response by buyers now, bringing it back up. Remember, the ball game closes in 40 seconds. Okay, so the momentum, which team will have the momentum going into the close? Oh my goodness. And NASDAQ is pushing back down. Okay, so good buying opportunity, came back up, but they retraced it back down. Now we're coming back down. If it closes below here, you might have one more bearish leg targeting that low of the day and taking it out. Oh man, this US30, let's go, Miss Jones, come on. We just need one strong close and one big breakthrough here. There's a lot of sellers, believe me. Ton of sellers are up here trying to sell this all-time highs, right? But if the buyers continue up here, could be a possible short squeeze. Notice again how they pushed that candle down, closed it below the red line. Notice we closed right there, okay? They gapped it down bullish down in here. That's a gap down candle. Look at it. We closed, gap down, coming back up, ignited. Can it continue to hold this ignited open? That's what I watch for. See where my cursor is? It's on that ignited open, okay? So it is holding, holding, holding. If it comes down here, is it refueling? It's still holding, holding, and it's building. It's holding and it's building, okay? It's building, building. Again, they rejected it back down. So that now watch. Can it still, it's an inverted hammer. Can we still hold this blue ignited open? Build, build, refuel now, refuel, refuel. There we go. We refueled like a rocket. So it's refueling, refueling. We should be able to take out that wick with this refuel. And now we got to target our next red line up there, okay? So you see how that ignited open benefited us there? It refueled, refueled. It came back down. It was that inverted hammer. We were right down here. Then it refueled, refueled. It allowed us enough momentum and volume to break that previous high, but we're now got a point of interest. It's a tough point right here. Now we're back in the money, okay? So this is where, again, if you want to reduce risk, you have an opportunity to now go to a break even completely. I'm still in this waiting for that volume to close or break this wick, okay? But wow, okay? So good bullish ignited open on US30. Beautiful, okay? Good move, wow, okay? Good buy, wow, okay? Good. 50 pips, guys, okay? Now can we target, but also closing above here. Oh my God, if we can close above here and build off of this, you're going to see a nice little short squeeze. Shit ton of sellers are selling up here, the all-time high. If we cut through this like butter, oh my goodness. Okay, but guys, you know, it might come back down on us. So we got to go through all of this again. We've got a lot of time still left on this, 2 minutes and 45 seconds. Okay, so, you know, that's a target up there. That was the previous high. of that candle. Oh my God, they slammed it back down. Whew. I don't know if I can continue to play this game anymore. I'm going to reduce my risk and be right below those wicks now, okay? So I'm bringing my stop loss right below there. I'm still in this, but I'm reducing. I eventually want to get to break even, but if I do take a loss, it'll only be a 10 pip stop loss, okay? I'm okay with that, but this shit, oh my God, I can't deal with this anymore. Okay, so I'm almost basically at a break even, just got 10 pips, just right below 50% of that candle in those wicks. Again, got slammed back down, but it's refueling. We have not lost our ignited open as of yet. We still have 2 more minutes to go. I cannot stress the importance if we close above here, how much that could change the depth of market in our direction as buyers. Man. And if we lose this open, then unfortunately it's going to be all this momentum. We lost it, and then it's going to come back down here and possibly break with a lot of selling pressure. That's why I'm reducing my risk as much as possible. I'm okay taking a 10 pip stop loss. No problem with that from where I originally had it. But I'm kind of upset with myself that I didn't take anything out of there. See, now, well, man, we lost everything. All of that volume. That's it. We're still holding that ignited open. Man. Now we got 1 more minute. Okay, it was building. They dropped it back down. Still holding. How long have you seen a candle hold an ignited open for? Have you seen it hold for a full 5 minutes? There, we just lost it. So it turned into a shooting star. Sellers have all momentum now. So it could definitely come break here, break those tweezer bottom lows. Remember, we were holding with those tweezer bottom lows. That helped us get that ignited open to continue come up there. Fortunately, I didn't do anything up 50 pips. So now I'm going to get stopped out, and the market is going to teach me a little bit of a lesson down here and say, why did you not scale out, you greedy bastard? You could have bought some hot dogs. So guys, my stop loss is just below these wicks. I will verbally let you guys know as soon as I'm out. Looks like it's going to be a high probability here. Next candle, again, ignited, bullish open. I don't think we have that momentum anymore. My opinion. If the buyers can prove to me, man. See, that was a short-lived ignited open. That's what I mean, guys. I lost confidence with the buyers. All of that momentum on that candle did not close strong. You can tell the significance of that. Like, you don't got to be an expert price action, trader to understand how momentum just switched right there. Big time. Just watching my stop loss, guys. I got taken out right there. Oh my God. So I gave up 10 pips. I lost 10 pips. But oh my goodness. Silly me. Okay, right there. Up 50 pips, did nothing. That's the way trading goes, guys. It goes. What goes up can come down. What goes down can come up. That's the way it goes. That's it for me for now. I'm going to take a break. Dave will be in. I'm going to come back later in a couple hours. We're going to do the FOMC. I don't want to continue trading this right now, nor should you. Maybe take a break. We'll come back FOMC and see how things are going. Hopefully you guys learned a little bit something about that, why it's so important if buyers closed it above there, why it was so important if we got blue volume closing above there. Now it's easy. You could sell with the market now. You could easily flip as a buyer to a seller. That's why it's important to learn about zones and wait for confirmations, and also learn how to reduce risk and take money out of the markets as well, okay? When you get greedy in these markets, the markets punish us. Okay, I know everyone wants more than 50 pips. Everyone wants 100. Everyone wants 200. When we go up 300 pips, someone's going to say, Ron, I want 500. I know, guys. I'm a trader. I know how it goes. But it goes a long way by taking money out, okay? I don't know if you guys verbally need me to tell you guys this every single day. If you guys need me to just close out trades let me know, because then that helps me too, where I can get some money in my pockets, because I'm trading with you guys. I'm trying to hold for the life of me to get these things to move 100, 200, and 300 pips, but I know that trading doesn't work like that. This goes against all of my rules, the way how I personally trade. When it goes up 30, 40, 50 pips, I go to an automatic break even, and it's just like pulling a string. When I go to automatic break even, I know I'm in profit and I should be taking out 80%. I should be sticking to my 80-20 rule. I don't know why I don't do it on these live calls for the life of me. I keep saying every time I start one of these calls, I'm gonna say, Ron, just stick to your rules. Stop worrying about the other traders, stick to your rules. But these are things I need to learn how to be a YouTube streamer. This is the thing that kills me as a trader. I know what to look for when I'm trading, but it's hard to educate too, because then sometimes I close out and then it continues to go, and someone's going to say to me, Ron, why did you close out so early? And then I got to go through my spiel again. And so I don't know, guys, how to help us on these live calls. I don't know. I hope you guys can feed off of me breaking these downs. It's like a commentator when you watch a football game. You know, you got Joe Buck, Al Michaels, Tony Romo are in the box, breaking the game down. Like, I know my wife doesn't watch NFL football, but if she's watching it, the commentators are telling, you know, what's going on. Let me be kind of the commentator and let you guys figure out what you need to do, okay? Because it will make my life so much easier on these calls. Okay. Otherwise, I'm just going to become very robotic, like how I normally am, and I'm just going to do my thing on here. Okay. And then you guys do your own thing. You guys figure out what works for you and your trading. Okay. That's the best honest truth that I can say on here. Okay. But ultimately, you remember, guys, my stop loss was down in that block. I moved it up substantially and just lost 10 pips. From which could have been a dramatic loss if it continued to come back down. So I am happy about that. I'm just not happy about taking out any profit up there, okay? Yes, this thing could turn back up, but we'll revisit this later on, okay, guys? Make sure, please, guys, if you guys can hit the likes, okay? That's why we'll come back on and do a live FOMC session with you guys. If you guys hit the like button kindly while leaving the channel, subscribe if you haven't subscribed to the channel yet. We do appreciate it. We're 2 subs away from 600. Let's try and hit that psychological number of 600. And you know, it helps, guys. Like, if we close above 600 when we're trading, that could take us to 610 to 625 in the depth of market. If we hang out here and we don't get those 2 subs, it could drop. You know, like, I'm talking price action. I'm talking about real trading. If you don't close above 600, then the sellers could come in on the next candle and drop this from 598 right down to 590 to 575. Okay, it's just like trading. I'm telling you, markets are very psychological. These numbers, you got to really, really focus on these things. Gold is continuing to move. That's why I was saying, don't be looking for sells on gold. It's still holding. It did retrace back, but going back up. Gold is strong. US30 is still not technically broken down. It's still building in here. It's still in that consolidated phase. NASDAQ is attempting to close below the lowest point of the day, maybe continue selling off. But we'll see you guys in a couple hours. I'll be back around noon, 12:30. Dave has posts. Get some rest, guys, and get a break, and we'll come back for live FOMC, okay? And thanks, guys. We'll see you guys in just a little bit, okay? Have a great day. Not a great day. Have a good morning, and I'll see you guys in just a little bit, okay? Thanks for everything, guys. You can see how the volume trades prior to FOMC. No complaints about Dow. Dow moved beautifully out of the gate. Just kind of cooling off right now. Could come back up, but it could break down. Even here, this would be an ideal level as well. If you're going to continue trading, have an alert in here. That represented the 9:30 5-minute block. Still hasn't came down in here. That might be a good opportunity maybe to entertain or buy a pullback at 45,900 right in there, okay, if it gets down in there. But guys, we'll see you guys in a little bit, okay? Thank you.
Hey guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.